So now, anyway, very good morning to you all. So I believe in punctuality. So that's what we have said 8:30. So I was determined to start at 8:30. Otherwise, it's not fair by the people who have ensured punctuality. So now today is our third session. And I was told by IBSL that all previous sessions have been recorded and it is available in, they have downloaded it. Sorry, they have uploaded in the system. Did you all have the opportunity of visiting those sites? The recordings are there now. Previous session, recordings are there. Last evening they have uploaded to the system. Is there anyone who was able to go through it? No, I don't think. Yes or no?
No, sir.
All right. So anyway, you don't have to worry about it. It's already there in the system. You can, when you have the time, you can go through it just to refresh your own memory, because these recordings will be there for some time. It will be there for some time. So today is the third session. So before I move on to the third session, I just briefly go through the previous slide. I'm not going to explain it again because it is there and the recordings are there, but just to refresh your own memory, I will just go through it, the all previous, the entire sessions. Now these are the course contents. This we have already explained, story-based learning. I have narrated, shared some of the stories. Then credit risk and effective management, the crossing, the risk involved, something similar to crossing the Gaul Road in Colombo. This was what told to us by a senior banker. Now there is an element of trust, definition of security, then role of security in bank lending. Then what do we mean by the word security? Then importance of updating a knowledge bank, determining the suitability of security factors to be considered. Then role of branch manager, credit officer. Now if you are a credit officer or a branch manager, you should know the what you call credit policy of your own bank. Without knowing the policy of your institution, you will not be able to deliver. So that is one of the important criteria in credit management. Now, if you are assigned to a particular area, or if you go to another bank or another financial institution, first thing you will have to ask is, can we see our banks or financial institutions credit policy? Because you have to adhere to the stipulations given in the particular institution's credit policy. Now, this is your menu card. These are the securities which are available to you, which have been authorized by your institution, by the central bank, towards acceptance. So whenever we are granting any security, we are obliged, or we have been mandated, stipulated to take any of these securities to secure our advance. So why are we taking the securities? That is to face any eventuality which could arise due to non-payment, due to default, or due to various eventualities. So every security which is listed here, which are listed here, there is an element of element of risk. So now I have shared some of my personal experiences on each and every security which is listed. I have my memory is very intact. So I have stepped into my 47th year in banking today. So for every security, there is an element of risk. So what are these risks and how do we mitigate? I have shared them. I have shared this with you all. Then when we take security, what are the important aspects? You have to find out the ownership. You have to see the valuation. Then creation of charges. What are the 3 ways in which bank creates charges? Lien, pledge, and mortgage. I have explained this to you all in detail. Then the types of mortgages, very important when we are taking a mortgage, because whenever you are executing a mortgage or when you are granting a facility against an existing mortgage, you have to ensure the legal enforceability of the mortgage you are having it. Because I have come across several instances in some of the banks where I was attached to, the staff or the people who were instrumental, they have been granting facilities against an existing mortgage, but later it was found those mortgages were not valid, are not valid, because these people, when they granted the loan, they were under the impression there is already a mortgage. Because very many times, this is a common mistake which some of the bankers make, because they are under the impression there is a mortgage already, and so therefore we can grant. You may have the mortgage, but you have to ensure the validity of the such mortgages, whether it is a fixed mortgage or a floating mortgage. And I told you all the mechanism available at your disposal to assess what is this type of mortgage. You can go through the mortgage bond, and the easiest way is you can get a confirmation from the legal department or your bank lawyer, branch lawyer, who has to confirm the type of mortgage. So if it is a fixed mortgage, remember, you can't use that mortgage for any other facility. That mortgage gets cancelled with the settlement of the facility. You may have granted a loan to a customer to be repaid within a period of 20 years, but he settled the facility within 1 year, but that mortgage also is cancelled. But if it is a floating mortgage, you don't have to worry. That mortgage is valid forever. Now, let me ask you a question. I was telling you all that when you are taking, our preference is always we like to go for a floating mortgage. But one particular asset, we always take a fixed mortgage. What is that asset? What is that asset? One particular mortgage. What is that asset? One particular mortgage, we always take a fixed mortgage. What is that asset?
It's vehicles.
Yes, very good. It's motor vehicle. Motor vehicle, we always take a fixed mortgage. Why? Because when we take a mortgage, we have to ensure not only we have to ensure the validity of the mortgage, we have to ensure that that particular asset also remains intact. But as far as motor vehicles are concerned, because we know very well, the motor vehicle will have a depreciation value. And if you ask us now can we locate, or you can ask yourself, can you locate the very first car which you used many years ago? Is it on the road? No, we have no idea where this vehicle has gone. So why? Because there's a depreciation value. So therefore, motor vehicle, we always take a fixed mortgage. At the same time, when you are taking a mortgage over a consignment of motor vehicle, if Indra Traders, as an example, they are dealers in motor vehicles. So if we are taking a mortgage over their stocks of motor vehicle, what is a mortgage you are taking?
Floating mortgage.
If a person, floating mortgage. Why? Because there, when you are taking the mortgage, we are using the general term, and we are saying mortgage over motor vehicles of branded vehicles, Toyota, Honda, Nissan, Sunny, like that. We are giving the types of vehicle they have, but we are not giving the serial number of those vehicles, nor the engine number, nor the chassis number. Nothing is given. We are only using a generalized term. So that means we are taking a mortgage over their stocks of motor vehicles. Their stocks of motor vehicles. So therefore, in that case, there will be a floating mortgage. But if Indra Traders managing director comes to your bank for a loan to buy a motor vehicle against a mortgage of his car, then you are taking a fixed mortgage. So remember, floating mortgage is always beneficial to the bank, to the financial institution. So whenever you are executing a mortgage, your preference is always a floating mortgage. You have to advise your lawyer to execute a floating mortgage. You have to use the word floating, but if it is vehicle, it's a fixed mortgage. The reason why we are stressing this importance is when you have a floating mortgage, even if you grant a temporary facility to a customer against a leeway available. Now, see, I have taken a loan for 5 million against a floating mortgage. I have paid 1 million. My balance is now 4 million. So the bank has a leeway. That means the difference, the amount what I have paid. That is in banking terminology, legal terminology, we call it a leeway. I have taken 5 million loan against a floating mortgage over my house. I have settled 1 million, so my balance is now outstanding is 4 million, but my mortgage is 5 million. So people might ask, the approving authority might ask, is there any leeway on the mortgage? The approving authority may ask, or when you are preparing a paper, they will ask, he has been granted a loan of 5 million and against a mortgage over immovable property for 5 million. So he has paid considerable amount, he has paid. Then they will ask, what is a leeway? That means that when you say the leeway, the difference available at our disposal against the outstanding to the mortgage. So the leeway is 1 million. So the bank can grant me a further facility against a leeway, or they can even grant me a overdraft facility, and they can secure it against an existing mortgage. Why? That mortgage is a floating mortgage. Any questions on that leeway? Is it understood? Is it understood? You all?
It's a small question.
Yes.
When we are granting a loan against a leeway,
Yes.
do we have to check the last entry again and again?
Not necessary, but it's a very good question. But the lawyers, when you ask a lawyer, they will say always they want to check the last entry again. But generally we don't. Now we check the last entry only in case we have to execute an additional mortgage. If you have to execute an additional mortgage, at that time, when you inform the lawyer or the legal department, they will want to go and again they want to go to the land registry and check it. But when you are the branch, if you are the branch manager or if you are the credit officer, at that point, if there's a leeway there, you can grant it. There's no problem. It's not necessary to go and check every time when you want to grant any additional facility. If you are granting against the existing mortgage, it is not necessary to go and check the last entry. But what happens is, if you inform the legal department to execute additional mortgage, at that time they will want to go again and check the last entry. It's a very good question. So it is not necessary. Generally, it is not necessary. Only the legal department will check it, because if you instruct them to execute additional mortgage, at that time they will go and check it. But generally, we don't check it. Again, there's a leeway available on the existing mortgage. Generally, we don't check it, we grant it. Is it clear?
Yes, sir.
Right. So now that is the mortgage. Then it is there already, the recordings. You can go through the recordings when you have the time. You can go through the recordings. These recordings will be there till you sit for the exam. After the exam, they will remove it. And these are the important factors to be considered prior to the execution of any additional mortgage. Then third-party mortgage, I explained. Category immovable property, house and property, land, condominium, immovable machinery. Then benefits in obtaining immovable properties, definition of parate, enhanced limit. What is parate action? Then you go for parate action, that is, then the difficulties we encounter, all these constraints are under your control, manageable constraints. Then when you come across a defective title, what are the options available to you? You can go for a title insurance. But remember, just because there's a defect there, don't be complacent thinking that you can always take a title insurance, because insurers also, there are instances, occasion, where the insurers have declined title insurance. There are instances where the insurers have declined title insurance. So you have to understand that just because there's a defect, you can't just go for a title insurance, because insurer also may decline title insurance. So before you go for title insurance, you have to get the concurrence of your branch lawyer. He'll have to confirm, he'll have to agree that he's prepared to accept a title insurance. Then after that only, you have to go for what you call title insurance. But remember, there are instances where even the insurer, has declined title insurance. There are in certain instances, insurers also have declined title insurance. Then what happens if the title is not recommended, that is title insurance? In properties with life interest, I told you all. Then post sale value, then occupancy of the property. Then recordings are there, so there's no necessity for me to go visit again, explain again. Right. Now we stopped at this. Now this is that. Now look at this particular slide. Is this slide is clear to you all? Is it this? Can you all see this slide? Is it clear? Yes.
Yes.
Look at this particular slide. This is 1 week. Right. Now we have discussed the difficulties, problems which you will encounter when you are taking immovable property as security. Because even immovable property is a first-class security, and this security, even though it's a first-class security, you may encounter certain difficulties. So I have explained to you all the difficulties which we will encounter when we are taking immovable property as security, and how do we mitigate these risks? How do we mitigate these risks? So now we must remember that just because immovable, what you call, even though immovable property is a first-class security, we can't be insisting on immovable property against, for every facility what we grant, we can't be insisting on immovable property, because there are instances, there are certain customers, even though we prefer immovable property, they may decline, or they are not in a position to give the immovable property as security. They don't want to give the immovable property as security. So unlike during our time when we started our banking career, we were in a position to dictate terms to the customers. We can always ask the customers, we can tell the customers, this is the facility we are granting, this is the security we want, and we can dictate them. But today you are in a situation where you have no way of dictating terms to the customer. So the customer is in a position to dictate terms to the banks and financial institutions. The main reason is because they are in a very strong wicket. The customers are in a very strong wicket, because why? The banking is very highly competitive. Financial institutions are facing a lot of competition. there are 26 or 27 banks operating in Sri Lanka. In addition to that, there are finance companies and there are various financial avenues available to the customers. So the bankers are facing a very difficult task. So when we are granting facilities, we can't dictate terms. We, even the rate of interest, they come and negotiate with us for a better rate. So like that, so various obstacles we are facing, the bankers. So then we have to understand movable asset. Now, when you say movable asset means that is a very high risk security. It's a very high risk security. Why do we say it's a high risk security? Because unlike immovable, when you take movable asset as security, this particular asset could be removed overnight by the customer. They can remove the say, what do you call assets overnight. So that's what we say it's movable. They can remove the asset whenever they want it. They can remove the asset. So it is a very high risk security. A mortgage could be created over a variety of items which are categorized as movables, such as motor vehicles, inclusive of cars, vans, buses, scooters, helicopters, aircrafts, stocks in trade, and various other items which are considered as movables. These are high risk security. Even we could even take a mortgage over helicopters, aircrafts. Now, in one of the banks I was attached to, they took a mortgage over, helicopters and aircrafts. Supposing if the particular aircraft or the helicopter crashes, the bank also would have crashed. So they took a tremendous risk. In granting a facility to a customer against a mortgage over aircraft and helicopters. So what made them to give the facility? Because it's a highly remunerative facility, but at the same time, they have taken precautions to overcome any eventuality which could arise due to non-payment or due to that particular asset being destroyed. Like it's a plane. Now, yesterday I saw in Sri Lanka, there was a ship which is very much in the news. Now, last night I saw there was a message to say that insurers have agreed to pay $700 million to the Sri Lankan government as an interim relief. That particular ship, it has caused tremendous amount of damage to the country. It has affected the fishing industry, and as a result of that, environment and various other problems the country has to face. So now these people have got the claim, and last night I was told that within 2 weeks they will pay $700 million as an interim payment. So like that, even we have to ensure we take precautions, because why? These are all movable items. So we have to ensure that we have the effective mechanism is in place or available at our disposal to overcome any eventuality. Now, supposing if that particular ship, if they are not taking the insurance, or if they have not renewed the insurance, or if they have allowed the insurance to expire, see the repercussions. So that's why we say, when you say movable asset, it is a high risk security. When you say movable asset, it's a high risk security. So remember, our preference is movable. Our preference is immovable. But due to situations which are beyond our control, we are compelled to take movable asset as security. Now, if you take your own banks or financial institutions balance sheet or annual report, you could see that your bank, your institution where you are attached to would have granted billions, not millions, billions of rupees against movable asset. Billions they would have granted. It's a high risk, but at the same time, they have taken adequate precautions to ensure they are in an effective wicket to overcome any situation, to overcome any eventuality which could arise overnight, unexpected eventualities for which the bank is dependent on people like you all, for which the bank is dependent on people like you all. Approving authority is approving the facility. It is the responsibility of young bankers like you all to ensure that you mitigate the risk. They will approve the facility. They will approve the facility subject to various terms and conditions. They will approve it. But it is your responsibility to ensure that you have you take adequate precautions. Now, I must also share with you all another important thing which I missed at the very outset. Before, I think up to 2019, the security, when you are sitting for the diploma exam, there's an option given to you. Out of the 5 sections, security is also another question. So you are given an option. So you can select 3. So some people select security, some people don't select security because there's an option given. So later what happened? The management, IBSL management failed because there was some concern expressed by some of the bank people, bank CEOs. There's some of the people who are having diploma, they are not very knowledgeable in some of the subjects, or even though they are having diploma. So later, we had a meeting and it was felt why these people are not having the knowledge. Then I pointed it out to the management that the reason is because their students are given an option. So out of 5 questions, if the option is given for them to answer 3 questions, some people may, select the 3 areas on which they are comfortable. As a result of that, they could exclude 2 areas. Securities also they could exclude, or appraisal like that they could exclude. So to ensure that the students have an effective understanding covering all aspects of credit, I suggested at the meeting, to make all questions compulsory and make it a 2-paper session. That means earlier it was 3 hours, and to make it 6 hours, and to make securities also a compulsory subject. So I think from last year, they have made securities a compulsory subject. So that means there are 5 sections are given. I think all 5 you may have to answer. So whether you like it or not, you have to answer securities also. There are people, some people, not all, some people when they don't come for classes earlier, they don't come for classes, so therefore they go through the notes and all. So sometimes they find the securities, they are not comfortable, so they can exclude them, they can omit securities. But now you can't do that. Why? Because this subject also has been made a compulsory subject. The paper is 6 hours, morning 3 hours, evening 3 hours. So this subject has been made compulsory. Why? Because a banker, a branch manager, a person who is handling credit should know the important aspects covering securities and the risk involved in taking each and every securities, how to set a facility, how to secure a facility. So then now from last year, they have made this particular subject compulsory. So remember, this subject is now compulsory. So you have no choice whether you like it or not. You have to answer this question. But remember, you will be given 20 marks for this particular question. Now, if you answer securities, you are assured of 20 marks. Now, I am the person who will be marking the papers. I am the person who has set the question also. So I am the person who will be marking the answer scripts. So remember, when I mark the answer scripts, I am not looking for the language, grammar. I am not looking for any grammar because this is not an English class. What I am looking is when I read it, I should be convinced that the candidate has got a proper understanding of the subject. Because when I read it, because when you correcting the papers also, it's not an easy task. Each and every paper is corrected by me covering this particular subject. So I have to read it, every word what you use, I have to read. So when I read this thing, if I am convinced that the student has got a proper understanding, you get the full marks. So I want to make that clear to you, so you can answer in whatever way you want. You can answer. So don't worry about the grammar. But the only thing is, with the examiner, when he reads the paper, he will know. He will be convinced that the student has got a proper understanding of the subject. That is, the student has got a proper understanding of the subject. So it's very important for you all to remember that security is also this particular question you have to answer. It's a compulsory subject. It's a compulsory subject. So now we are on the subject of movable asset. We are on the subject of movable asset. Is it clear to you all? Is it clear? Is it clear?
Yes, yes, sir.
Yeah. So now I am coming to the important aspect covering. Now comparison of the immovable and movable. Now look at this particular slide. Before I move into this particular aspect, so now comparison of immovable and movable. Now this particular slide, I think I have shown this earlier also. When you look at this particular slide, you will get a proper understanding of the what they call the difference in accepting immovable property, the risk we face in accepting immovable property against movable property, and the advantages which are available to you in accepting immovable property against movable asset. So we can't help it. We can't help it. So we can't help it because you are compelled to take movable asset. But if you are a branch manager, when you are taking a movable asset, you are going to have a sleepless night. Can't help it. You are going to have a sleepless night. So how do we secure? Now, remember this particular topic is a very important topic. There will be a question on this because normally when we set the paper now, there will be a question on immovable, there will be a question on movable asset also. So therefore, immovable I have already explained to you all. Movable, remember there will be a, definitely there will be a question. Definitely there is a question because I have set the paper already. There is a question. So now I am going to explain to you all. Remember, listen to this session very carefully, and if you have any question, you can ask. Now, before I move into the movable asset again, now at the very outset when I started the session about immobile property, I told you all immobile property. Now I told you all about the parate execution. Now, what is parate execution? If you have if you are granted a loan to a particular customer against immovable asset, if the original amount was how much? Original amount?
5 million.
5 million. If the original amount was 5 million, if the customer defaults, you have a right. You have a right to go for parate action. That means you can go and auction the property. You have a right to auction the property, but that is not the first option. That is not the first option. That is the last option which you have to explore. So at the time when they introduced this particular legislation, particular act, when it was enforced in 1988, what was the amount which was stipulated? When this act was enacted in 1988, what was the amount which was stipulated?
150,000.
Very good, 150,000. So now that 150,000, now it has gone up to 5 million. Why it has gone up to 5 million? The reason is You all know the reason why, because banks have abused and misused this particular weapon which was given to them. That means the bankers, they were given an option to auction the immobile property in case of a default. So some of the bankers have abused, or they have misused this particular weapon. As a result of that, the powerful weapon we bankers had, has been, withdrawn by the government, in the sense that they have made it more tougher. So 150,000, they have made it 5 million. So if it's 5 million, below 5 million, if it is against immobile property, you cannot go for auction. You have to go for the normal court action, mortgage action. But now, if it is only 5 million only, you can go for parate action. That also you have to be very careful. Now bankers are very, very careful. Now just because the customer defaults, they are not going. Because why? They know very well the customer can always go to the courts, seek the intervention of the courts, towards seek the intervention of the courts in getting an injunction, in preventing the bank from going for legal action, going for auctioning the property. They will prevent the bank. The courts will issue an injunction to the bank, instructing the bank not to go for auction. That is what is called injunction. Because remember, your auctioning the property is a last option available to you. So why I am repeating this again means, when this amendment was enforced in 2011 only, the then government increased the limit from 150,000, they increased the limit to 5 million. So at the time of increasing the limit, at that time, the government felt that, the bankers also objected, before they enhanced the limit, the bankers also expressed their concern. Then the government went one step further, and they told the bankers, okay, now we are extending this parate action. Now earlier it was only for immobile property. So when they increased the limit from 150,000 to 5 million, with the increase, the government told the bankers, okay, we are increasing the limit to 5 million, but to give you some comfort, we are now extending this parate action even for movable asset. Just to make the bankers happy, they told, okay, now we are increasing to 150,000, is increased to 5 million. But earlier it was only for immobile property. So now we are extending this parate action even for movable asset. So section 22 of the principal enactment was repealed, and the following section was substituted. Interpretation. The bank means a licensed commercial bank or licensed specialized bank within the meaning of the Banking Act number 30 of 1988, which is empowered to take possession of movable or immobile property which has been mortgaged to the bank as security for any loan, overdraft, advance or other accommodation, and in respect of which default has been made. So that means, remember, now this parate action is available to you even for movable asset. Even for movable asset, it is available. That means immovable, if the customer defaults, if everything fails, you can go and auction it. Now this particular instrument, this particular legislation, particular weapon has now been extended to movable asset. Movable also you can do it. Now I am asking you a simple question. Is it practical? You are a young bankers. Is it practical? Immobile property, it's practical. You can always auction it. You have to pass a resolution. For movable, is it practical? Is it practical? Movable, is it practical? What do you think? Let me ask you a simple question. I have taken a loan from you. I have mortgaged my stocks, I am let us assume that I am a what do you call, I am a merchant, or I am having a shop where I am having mobile phones, right? I am just asking a simple general knowledge question. I am having mobile phones. I am the agent of Apple, Samsung, and all the phones, iPad, everything I am selling. iPad, computers, everything I am selling. I am having a luxurious, what do you call, outlet in a highly commercial area. So I taken a loan from you for say 5 million. What is security? Mortgage over mobiles, iPads, Apple iPad, Apple iPhone, everything. I have a stock of 10 to 15 million against which you have taken a mortgage. No, you have given me a loan. I have defaulted. So now you are going to execute the parate action. Is it practical? Is it practical? But
No, sir. It's
yes,
not practical.
No,
yes. Why do you say? Why do you think it's not practical?
Stock
it's like if we are going to acquire the stock, so then we have to find buyers to sell the stock. Otherwise, we can't.
Yes, yes, that is there. If you are going to acquire the, see, you can, no, that is there. That is not a problem. But I am asking is, mobiles, and as an example, mobiles and iPhone and all these things, you will have a buyer. Apart from that, just tell me, now even though this particular parate action is now extended to movable asset, I am asking you a question whether it's practical. Now, let me ask you, I have taken a loan from you, I have defaulted. I had defaulted. So now you are threatening me that you are going to go for parate action. So when you are threatening me, saying that I am going to go for parate action, I am going to take over your stocks, when you threaten, I as a customer, what will I do? What will I do? What do you think I will do when you are threatening me that we are going to take all this?
move the stock, sir.
That's right. Very good. Excellent. I will immediately remove all my stocks. I'll bring my car, put all the mobile phones, iPhone, mobile, iPad, computers, everything, dump it in my car, and I will take it home. Then you are threatening me. You are threatening me, saying that you are going to take over the stocks. So I will say yes. You gave the correct answer because it is not practical. Why? Unlike immovable, the government at that time, government has, just to make the bankers happy, they have extended it. But the people who drafted, they are not practical people, no. So they just to make us happy, they have given it. But we know very well it is not practical, because when you are threatening me, I will immediately remove everything, and then when you come and want to take over, because the takeover process takes some time. When you are threatening me, you can't just come and take over. There are certain things which you have to do. What are the things? You have to pass a resolution. You have to pass a resolution, board resolution. After this resolution is passed, then you have to put an auction notice in the papers. So I'm not going to look up and wait when you are putting the auction notice. Now, in this, when I am explaining to you all on this particular subject, I can tell you another important episode, which comes to my mind. When I was at HNB, there was an instance, the bank one particular branch has given a facility to a customer who was having an outlet at PETA, 5 million facility against a mortgage over his stocks of various textiles and perfume and various other items. They had granted a facility, 5 million. This particular customer defaulted. They are taking a mortgage over his stocks. This customer defaulted. Then the bank has to, at that time they didn't have the parate action, the bank has to go for legal action. So they went for a mortgage action. It took some time, as you know, legal process takes time. It took about 4 or 5 years. And after that, after the conclusion of the legal action, we got a court order to execute a writ, that means to take over the stocks. So before the bank decided to take over the stocks, bank wanted to do an inspection to find out the availability of stocks and its value. So that responsibility fell on my shoulders, and I was instructed by the management for me to go and carry out an inspection and submit a report about the availability of the stocks and its value before executing the writ. When you didn't execute the writ, mean we have got the court order, permission to take over the stocks. So before they wanted to do it, bank wanted me to carry out inspection. So I went on inspection with another colleague of mine. When I went on inspection somewhere at PETA, when we went there, this customer was there. Then I said, I am from HNB. We have come here to find out the stocks, the availability of stocks and the value. Then he took me upstairs. You won't believe, he just showed me a box and said, sir, these are your stocks. I said, only these are the stocks? Yes. What happened to the other stocks? We have sold it. This is what we have. Then you won't believe, what was amount? 3,500 rupees. We have granted a loan of 5 million against stocks valued at 10 million. And he defaulted. When he defaulted, we can't go and take all the stocks. We had to go for legal action. And by the time we went for legal action, it took some time. Customer had only 3,000 rupees worth of stocks. So I prepared a report and submitted to the management saying that he had only 3,000 rupees worth of stocks. Then what did the bank do? Bank decided to write off the facility after spending millions on legal action. So here, even though that particular the government has amended this particular act and empowered the banks to go for use the parati action even for movable asset, it is not practical. Is it clear to you all? It is not practical. So you can threaten the customer, but in immovable, you can threaten. Customer cannot do anything he can. But here, when you threaten the customer, because he knows when the customer defaults, he will slowly remove all his stocks. Now, if I am a customer, if you are a customer, you are not going to look up and wait, because you will carry out inspections, regular inspections you may have carried out. When the moment the facility goes, we are coming across many instances like this. We are coming across numerous instances like this, movable. So now here, remember, even though they have extended it to make the bankers happy, now we are extending it to movable asset also. It is not practical to execute parati action for movables. Is it clear to you all? Is it clear? Any questions on that?
So, small question.
Yes.
Now, this stock should be lodged under dual control?
No, not necessary. Not dual control. Dual control, it's not necessary. Dual control, we may do it for pledge, but here no dual control.
Right.
Here no dual control. Here no dual control, because when you are taking a mortgage over movable, it is under the control of the customer, and he can't even put a board to say that this is mortgage to the bank. He can't say that. So it is a high risk security. So now look at this. I have seen only one bank has used this up to now. Now this particular notice was put by Cargill's Bank recently. There they have, you can see here, they have, now here this particular customer, they have granted a loan to this particular customer against a mortgage over immovable as well as movable. So the first part gives a description of the immovable property. Second part, now you can see, I saw it in the, I have captured it, this particular one, it appeared in one of the newspapers. The second part, stocks located at, they are giving the hardware, Stanley Road, Jaffna. They are giving the details of the stocks. They say it is tiles. So the bank has put a notice. So this is a very good case study for you all. So when this notice appears in the papers, what will the customer do? First part, of course, customer cannot do anything because he can't remove it. Second part, can he remove the stocks to another location?
Yes, sir.
Yes. You can see here the second part. Now here, this is a very good case study. I think up to now only one bank has put this. None of the other banks have explored this option because they know it is not practical. But here they have, Cargill's Bank has put a notice. They have given the first part and the second part. Now, second part, when this notice appears, the customer is not going to look up and wait. He will slowly remove all these stocks to a new location. He will slowly remove all these stocks to a new location. So when you want to, because why? You have already, you have given publicity to the whole world saying that you are going to auction the property. Now, even if this is a, what you call common sense, it's a human week. Now, if I am a customer, I'm not going to sit, just look up and wait. Most, I don't think any customer will just wait till you come and take all the stocks. They will slowly remove the stocks and say, no, we don't have the stocks. So this is a very good eye opener. Remember, for movable, priority action, even though it is available, it is not practical. It is not practical. So therefore, it is a high risk security. Now, the drafters, the legislators, when they amended it to give some comfort to the bankers, they have told, okay, don't worry, although we are increasing the limit to from 150,000, we are making it 5 million. We are also extending this priority action to movable asset. Now you all have the right to even movable asset, you can do it. But there is a time period for movable asset when the customer defaults, the procedure, it results in at least there is a delay of 2 weeks or 3 weeks or 1 month or whatever this is, within which the customer can play around. Is it clear now? Clear? Any questions? Any questions? Can I move to the next one? Yes or no?
Yes, sir.
Right. So now that is clear. Now look at this particular slide. Right now I'm going to show you some images. Look at these images, because this also I'm going to spend considerable time in explaining, because this is a very high risk security, but billions of facilities have been granted against these stocks. Now look at these particular slide. These are all mortgaged to various banks. Now I captured this order stock inspection which was carried out by me at an outlet in Peta, Main Street. These are. So now just imagine these are all mortgaged to bank. Now here this is a customer who was, I think, handling who was dealing in tiles. Now here same story. Now here this particular customer is involved in the business of branded wristwatches. Now this is a customer who is involved in the business of hardware, paints. Now this is a customer who is involved in steel business. So like that, there are so many customers. All these are high risk security. Now look at these particular securities. Overnight, they could remove all these stocks. That's why I'm showing these images, because these are captured from a true scenario from some of the inspections we have carried out. I have shown this at various forum, just to give you an understanding. Now, when you look at this particular stocks, they say these are stocks, but we don't know whether these are empty boxes or whether there are anything inside the box. So it's also same thing. When you go on inspection, they say, sir, these are the ones. So when you go on inspection, are you going to look at this box and come back? No. You are supposed to check its contents. It's a difficult task. Your bank expects you to check its contents. So it's a very difficult responsibility. Now here also, how do you check all these stocks? Now here he has put some colorful stocks on top. Underneath, we don't know what is there. So your bank expects you to check everything. Your bank expects you to check everything. But remember, when you are doing immovable property, when you are taking a mortgage over an immovable property, when you are securing an advance against an immovable property, there are two external authorities who are assisting you. Who are they? When you are taking an immovable property as security, you are a banker. You are a banker, you are a bank manager, or you are the head of the financial institution of that particular branch. So you are granting a loan, and when a customer wants to offer immobile property, you have the comfort, you have the luxury in getting the assistance of two people. Who are they? Who are they? Who are helping you?
It's a legal officer and the panel valuer.
Right, very good. You have the legal officer and the panel valuer. You are having the legal officer and the valuers at your disposal. So you don't have to worry. They will advise you. The legal officer will advise you of the ownership of the particular property, and the valuer will advise you of its current value, and he will and all the important aspects he will go through and advise you. So you have the external assistance of two professionally qualified people. But when you are taking movable asset as security, who are the people who are there to assist you? Can you all tell me who are there to assist you? When you are taking movable asset as security, when you want to create a mortgage over any of these securities, who are the people who are there to assist you? Can you all tell me, according to you, who are there? There is no one. There is absolutely no one. Your bank is dependent on your judgment. That's why this diploma in credit management will play a major role, because when you're having a diploma in credit management by IBSL, it's a very valuable, it's a very valuable diploma. The diploma given by the IBSL is a very valuable diploma. So you are now, if you are a credit man, if you are a person who is involved in credit, you have no assistance, help from anyone as far as movable asset is concerned. You have the luxury of the legal department and legal officers and the valuers only when you are taking a mortgage over immovable. All other securities, your bank is dependent on your judgment. They whatever you say, bank will accept it. But later, if it was found or if it was revealed that due to your lethargy something has gone wrong, it may even result in you bank or your institution, they may even take disciplinary action against a particular staff member who was instrumental, because they have approved the facility, securing the facility and mitigating the risk is vested on you. So remember, when you are taking these securities, there is nobody to assist you. The bank is fully dependent on you. I know now when we were at HNB, billions of facilities we have granted. So now, I was in charge of this particular portfolio, the bank, but we never, we never let the bank down. Not only at HNB, I was the head of credit administration at Pioneer. I was head of credit administration at Union Bank. I was head of credit administration at Amana Bank, like that. So we had never let the bank down. So we had a effective team. We had an effective team. We have trained them. So the bank could depend on us. The bank could depend on us. So here, the responsibility is on your shoulder. Now I am going to explain to you all how do we secure this, because you are the person, you are the manager, you are the credit officer, your bank is dependent on you. Whatever you say, they are going to accept it, because you can't. Can you go and tell the bank, no, I want to get an expert in textiles. I want to get another engineer for him to come and check the hardware. No, they will never allow that. They are dependent on your judgment. No bank will give you any external assistance. It will be given to the bank relies on your total judgment. Now I am going to give you a good example, a simple example, because I think 3 or 4 years back there was a question on that particular question. I am going to repeat that question here. I think into 3 or 4 years back there was a question on this. So I am going to take this as an example, because why I have put this wristwatches, because this is to make this session interesting so that you will remember this. Now look at this particular image. If this image is clear to you all, can you all see this image?
Yes, sir.
Yes. Now here in this image, you have the images of 2 branded wristwatches. What are they? I am just asking to see, I want to know whether you all can You all could see that. What are they? What are the branded?
Omega and Rolex.
Very, very, very good. So Omega and Rolex. Now this particular image why I am showing you is to give you a what you call proper understanding, so that it will be interesting for you all to know, because when you are lecturing here, we put here and there some spices and make it very interesting. Otherwise, the session will be boring. Now, let me ask you a simple question. This particular customer, a customer who is involved in selling wristwatches, branded wristwatches, a customer who is selling branded wristwatches approaches your bank for a loan. This particular customer has approached your bank and your management, the bank has approved him a loan. The bank has approved him a loan of, say, 100 million. As an example, the bank has approved him with a loan of 100 million. What is the security? 200 or 300 million worth of wristwatches, all branded wristwatches. Customer is telling, I deal only in Omega and Rolex wristwatches. Worth I have up to now, at the moment, I am having 300 million worth of branded wristwatches. Branded wristwatches. So I want a loan of 100 million. Your management has approved it. Because we are talking about securities. My session is on securities. So a paper has come to you, they have approved it. Now, how do you secure? The bank says in the approval memo, they said this particular customer has been approved a loan of 100 million. What are the conditions? Against a mortgage, floating mortgage over stocks of branded wristwatches valued at 300 million. So, you are responsible to go and take a mortgage for 300 million. Now, this particular mortgage, it could be executed by you in a branch level or even the legal department, but legal department is not going to check the ownership and all. They are not going to check the title because it's not practical. Whatever you say, they will execute a mortgage because movable, it is not practical for us to go and trace at the land registry. So how do you secure? Look at this particular slide. I am going to give you a good example. Now this particular slide, risk involved. Now here, I don't know whether you could read this. According to you, this particular customer, not a customer, merchant, who is dealing in luxury wristwatches, I saw in the papers, they advertised, they put ad, they are selling Omega wristwatches. Can you look at this particular slide and tell me what is the price of an Omega wristwatch? Look at this particular slide and tell me what is the price of an Omega wristwatch? According to this newspaper, these ads.
So it's 2,060,000, sir.
Very good. So you could see 2,060,000 Omega wristwatches are being sold in Sri Lanka for rupees 2,060,000. It's unimaginable and unbelievable, but they are advertised. It was advertised in the Daily Mirror or some papers. It was advertised 2,060,000 at Gold Case opposite the Indian High Commission. These people are having a showroom, so they are selling branded wristwatches. 2,060,000. One wristwatch is 2,060,000 rupees. So let us assume. Now let us assume this particular comes to your bank and he has been approved. I am taking it as a case study. This particular customer. Now, although I am talking about wristwatches, the same procedure steps could be followed, should be followed for any movable item offered as security. So that's why I have taken the wristwatches as an example, because there was a question 4 years back on this particular wristwatches. So I am giving you so that it will the same procedure you have to adapt it. Same procedure. So now 2 million rupees. Omega wristwatch is sold at 2 million rupees. So this customer is telling he is having 300 million worth of wristwatch stocks. Management has approved him a loan of 100 million. And they have said loan of 100 million approved against a mortgage over branded wristwatches, Omega, Rolex, amounting to 300 million stored at the customer's showroom at Gaul Road, Colombo 3. So now look at this particular slide. What is this one? What is this wristwatch? What is this wristwatch? This is a, can you all see the brand? What's the brand? The brand is clear?
It's Rolex, sir.
Yeah. It's a Rolex wristwatch. And this is not the original Rolex. It's a duplicate Rolex. What's the price of this Rolex? 14,000 rupees. This Rolex is 14,000 rupees. But this is not the original. So when you are wearing a wristwatch, you know, when somebody looks at your wristwatch, they know, oh my God, this man is wearing a Rolex wristwatch. Nobody is going to ask you, is it original wristwatch? They will look at the brand and say, oh, this man is wearing a Rolex wristwatch. But it is not an original Rolex. This is a duplicate Rolex. It is at Majestic City, you know, before the pandemic, you know, there was a merchant who was selling, not only Majestic City, opposite Majestic City also, there are people who are selling this. But these are all duplicate wristwatches. So now, why I am showing you is, you could be taken for a ride by this customer, even though he has told the bank that I am having 300 million worth of Rolex wristwatches, Rolex and Omega. Each wristwatch is valued at 2,000 rupees. At the same time, these duplicate unbranded wristwatches are also available in the market for 10,000, 14,000. I could remember when one day I went to Majestic City and I was window shopping. On top, at the top floor, there is a place where they are saying wristwatches. They were having Rolex wristwatches. I asked, what's the price? They said 14,000 rupees. And they were giving a discount for credit cards. So then they said, sir, this is not a original, these are unbranded duplicate items. But I didn't buy it. But it's a duplicate. So why I am showing, comparing these, I am giving the true scenario because you could be taken for a ride. So if this particular customer comes to your bank, not that he is coming, he has been approved a loan by your management, now you are going to secure it. How do you secure it? I will show you how you are going to secure it. Now look at this. This is also same customer has advertised. This is Rolex. This price here also, the price was something like 2 million. Now here, this is a duplicate one. This is an original one. Here you get duplicate one for 14,000. Original one is for 2 million. So now we are going to see how we are going to secure it. We are going to see how you are going to secure this particular consignment of stocks, 300 million wristwatches. How do you secure it? Now, mortgage of stocks in trade and the risk involved in obtaining such security. This is the most riskiest security. You know very well, this is the most riskiest security, as I explained to you all. The examples what I gave you. However, still under certain circumstances, we are compelled to consider securing facilities against such securities. However, now you may ask, so if it is risk, why are we taking these securities? You may ask, so if it is risk, why are we taking? We can't help it. Why? If you refuse to take, Allapu Gedara in Minya, he will take it. When I say Allapu Gedara, your next door, banks, banks are, in whatever location you take, wherever you are residing, you take. Almost all the banks are having branches. The place where I am residing, all the banks which are operating in Sri Lanka are having branches. In the place where I am residing, all the banks are having branches. Not only the banks, even the financial institutions are also having their branches. So similarly, wherever you are, all the banks are having branches. So if you refuse, you say, no, we can't take, this is a high risk security. Customer will say, thank you, he will go to the next door. The next door man will happily accept him. But this is a high risk security. That's the reason why the bankers are charging a very high rate of interest. When we are granting a facility against movable security, unlike immovable, our interest rate is slightly higher than immovable. Why? Because of the risk involved. Because of the risk involved, we are taking a high rate of interest. Number one is because of the risk. Number two, due to the high management cost. Now, unlike immovable, here you have a high management cost. Why do I say management cost? You have to carry out monthly inspections, and the customer will have to submit stock statements, then you have to monitor it. So there is the various types of monitoring aspects which you have to enforce to ensure that your security is intact. So because of that, we take a high rate of interest. So what are the risks we face? What are the risks we face when we take movable asset as security? This is the most riskiest security. However, still under certain circumstances. We are compelled to consider securing facilities against such securities. We are compelled. As I told you, your management has approved because it's a very good facility, 100 million facility. Just imagine the rate, the income, the remuneration which you are going to make on this facility. If you are granting a loan of 100 million, see the amount of income it's going to generate to you, to your branch. If you are a branch manager, you will jump and give the facility. Why? Because you can enhance your profitability because 100 million worth of facility. So at the same time, there's a risk. So are you prepared to take the risk? If you are a prudent manager, you will say, yes, I will take the risk. I will take the risk. I will ensure the stocks are intact. Always until the facility is repaid. 100 million facility. So I have got a 100 million facility. I have got it approved. So just imagine if you are granting 100 million facility, that will enhance your branch's profitability. At the same time, there are certain risks. How do you overcome that? What are the risks? Number one is constraints in identifying the stocks offered as security. The difficulties you have in identifying the stocks offered as security, unlike immovable. Number two, ensuring its appropriate value. That means, it's very difficult for you to ascertain its actual value. Because based on your experience, you are a banker. You are not a person who is dealing in textiles or wristwatches or mobiles. You are a full-fledged banker. So ensuring the appropriate value. So it is the responsibility has been cast on you to ascertain its value. How do you ascertain? Now remember, there will be a question on this. Then the value of stocks may become zero overnight. The value of stocks may become zero overnight. Why do I say it will become zero overnight? Because the customer, this wristwatch owner, merchant, after taking the loan, he can, one evening after closure of business, he can dump all the wristwatches into one suitcase and he can remove it. So the stocks may become zero overnight. Now I can give you another good example. About many years ago, about 5 or 6 years back, Fashion House of Fashions. House of Fashions, earlier they had their main stores, the main sales outlet was at Duplication Road. They had a massive 4 or 5 story building, massive one. It was a very popular destination. They had now again they have come back, they have opened a branch there. So they had their main outlet was at Duplication Road. One day when we came to work, when we opened the newspapers, when we went through the papers, I saw there was a big ad House of Fashions have put in the papers saying that we are moving to our new location because they have opened a new one at this DSN Mawata, Borala, they have their own building, another building there, the massive one. So we are shifting our outlet to our new building. So because of that, there is a sale at our present location. And they said discounts are given up to 50%, 50% discount. And then they have in that colorful ad, they put an eye-catching sentence. Our aim, they use the word, our aim is to ensure our shelves are empty. The your stocks may become zero, and just I'm on that subject. Our aim is to ensure our shelves are empty. So they want to empty their shelf before they go to the new location. They want to empty the shelf. So that means we are giving it a very cheap rate. So when we saw that, some of us, when we saw that, we were also naturally attracted. So we were thinking of going there during the lunchtime. We thought we will go. Then one of my staff members said, boss, my wife has gone. She is still in the queue. She is there for last 3 hours. Still, she is unable to enter the premises, house operations. So then we abandoned the idea. We thought we can't be going in. We thought we can just walk in and get, but when we heard, we abandoned the idea. Last day of the sale, what happened? House operations. They said the sale is up to 30th. First, they were moving to the new location. It went on for 4 or 5 days. Last day of the sale, that was the last day. What happened? Massive crowd. Can you all remember? It was highlighted in the papers. What happened? Last day of the sale. Any of you all? I will tell you what happened last day. Last day of the sale, still there was a big crowd outside. House of Patients, they closed the doors and made an announcement there. They closed it because they were taking the customers in batches. They were taking the customers. So last day also, there was a massive crowd and they closed the doors. And there were a lot of customers inside. So there is a limit, they can't take everyone. A lot of customers they were taking in batches. So at about 8 o'clock or so, they decided to close. The doors were closed. And they made an announcement, house operations. To the people who were inside the premises, they made an announcement and they said, today is our last day of the sale. 9 o'clock. By 9 o'clock, we want to empty the shelf. By 9 o'clock, we want to empty the shelf. So the customers who are inside now, the customers who are inside the premises, you can take whatever you want and please leave. You don't have to pay. This is a true story. So they told the customers, they closed the doors and told the customers, today is our last day, 9 o'clock, we are closing. We want to empty this. So people who are there already, you can take whatever you want, you can take it, but please take whatever you want and leave. You don't have to pay. So there were a lot of customers who were inside. Whatever they could grab, they grabbed and they vanished. Supposing if you were there, you would have taken some of the stocks. You would have been bothered to see whether this particular shirt is fixing you or whether you like the color, skirt is this thing, because whatever you want to take it and go out. So they have achieved their target. Their target was to empty the shelf, because these are all old stocks. Because they didn't want to take these old stocks to their new location. They didn't want to take their old stocks to the new location, so they want to empty the shelf, for which customers have helped them. So even though they said sale, 50% sale, it went on for 1 week. Last day, whatever items which were remaining, they gave it free to the customer. This is not an exaggeration this is not an exaggerated story by me. It is a true story. So why I am narrating this story is to give you a strong message, such stocks also could be given to you as security. So that's why we always say marketability of the stocks have to be ascertained. Now these stocks, why did House of Fashion decide to give 50%, say a 50% discount? Because they know these are all old stocks. And why did they? Now they have come to the ultimate, the final day. They even went to the extent of giving it free to the customers. Why? Because they know very well they can't sell these stocks because these are all old stocks. Fashion has changed. Even if they take, so there's no point in taking this. They want to dispose it. So when you are taking movable asset as security, you have the risk of such stocks being given to you as security. So I'm going to explain to you all. But so how do you avoid? How do you mitigate those risks? Then difficulties encountered in realization. Difficulties encountered in realization. Even if you take over the stocks, although the Parity Action now empowers the banks to take movable asset, I was telling you all, it is not practical. Why it is not practical? Apart from various other factors. Now see, can you go and take over the stocks? Where are you going to store these stocks? Operational cost. Then you have to find buyers. So difficulties encountered in realization. Then inability to have effective control. We can't have a control. We can't put our own security there. Now this wristwatch merchant has given wristwatches, you are taking a mortgage, can you put your own security guards there? You can't do that. It is not allowed. We don't allow that. It doesn't authorize us to put our own security people. We are only taking a mortgage. Then what is the other one? Borrower could mortgage the same wristwatches to a variety of banks and borrow against the same asset. He has mortgaged the wristwatches to your bank. After mortgaging the wristwatches to your bank, he can go and mortgage these same stocks, tell the same story, and go and mortgage to another bank. He can go and mortgage the stocks to another bank. So that bank also can take a mortgage. Like that, he can go to a third mortgage. Because when you are taking a mortgage over stocks, unlike immovable, there is no mechanism available at our disposal to ascertain whether these stocks are mortgaged to any other institution. Because we have no way of checking. We have no way of checking. Although the Secure Transaction Act, there are certain things. Other than that, we can't go to the land registry and check it because unlike immovable, these are all registered or recorded in one general folio. So therefore, the lawyers also can't check it. They can't go and check it from the customer. They can't go and check it from the land registry. So these are the risks involved in obtaining such securities, which has to be understood by you very well. Because this is a high risk, but at the same time, highly remunerative business, and you have to ensure the billions of facilities have been granted, but you have to ensure now, if you are the branch manager, till the facility is settled, you will not have peace of mind. Why? Because you are worried. My God, we are taking a wristwatch, mortgage or wristwatches. Every time when you are passing that place, you will automatically, your head will turn towards that. Why? Because you are granted 100 million worth of facility against mortgage of 300 million worth of wristwatches. Is it clear to you? Any questions before I move to the next one? Any questions? Any questions? Is it clear?
Yes, sir.
Right. So now we are going to we are taking the next step. Look at this particular slide. Make a note of this particular slide because this slide will play a major role in answering the question on movable asset. You can make a note of it. This particular slide will play a major role in answering the question on movable asset. As I told you, there will be a question on movable asset. How do you secure an immovable property? I told you, you will have to get you have to get a title report from the legal department. Now, here, if this customer, when this customer is approved a facility of 300 million against, 100 million against mortgage of wristwatches, then now you are going to secure. How do you secure it? So when you will call the customer and tell the customer, you have been approved a loan of 100 million against mortgage of branded wristwatches. Can you give us a stock statement? That is the first step. That's the first step. So then the customer will have to give you a detailed stock statement. He will give a detailed stock statement that is not verified by anyone, that is not authorized by anyone, that is not what you call countersigned by any wristwatch specialist. He is only giving a detailed statement running into several pages saying that I have 100 million worth of 100 wristwatches of Omega, like that, various brands he has given. So he comes and gives you the stock statement. So you are in possession of the stock statement. When the stock statement is given to you, you as a branch manager, you as a credit officer, you will go through it very carefully, one by one. That is the first step. So you remember, your employer, your bank is dependent on you. Now they have approved. The top board of directors, they approved 300 million against 300 million, and now the responsibility has been cast on you, passed to you to secure. You have to ensure that how do you secure that responsibility given. So they have passed the ball to you and told you adhere to this and release a loan. Now you are going to release 100 million. Remember, you are going to release 100 million. So the moment the bank has given you a blank check, they are told 100 million approved, you do this, you release 100 million after complying with this. So now you are compliant. How do you comply? You have to take a mortgage over the immovable wristwatches. How do you? First thing is, you take a detailed statement. Then after that, what happens? Thereafter, once you get the statement, now you have got the statement. You go through the statement very carefully. Then you can give it to your subordinates or whoever, tell them also to go through it very carefully. Item by item, you go through it. Finally, you accept 300 million. Now you are in possession of the stock statement. Then you will tell the customer, sir, we want to come to your shop to carry out the inspection. Because you are telling the customer, we want to come to your shop to carry out the inspection. We want to see now he has disclosed he has 300 million worth of wristwatches he has. So you are going to his shop to carry out an inspection. Thereafter, an inspection should be conducted to ascertain the authenticity of the value of the stocks movable offered as security and the reliability of the value stated. Thereafter, now you are in possession of the stock statement which the customer has given to you. So now you have to go to the customer's shop to ascertain the accuracy of the statement what he has given. So you are not taking any valuer or anyone. The bank has given that power to you. So you can't take any outside for which you are not being authorized. Bank is dependent on your judgment. So you are going to the shop to carry out an inspection. Why are you carrying out an inspection? What is the reason for you to carry out an inspection? That is to ascertain the authenticity of the value of stocks movable offered as security and the reliability of the value stated. So you are carrying out inspection to ascertain whether the value given by the customer is correct, dependable, authorized value. For that purpose only you are carrying out an inspection. So now we are going to the shop. You are at the shop. What do you do? Number one, we have to find out is for movable asset. Whenever we are taking movable asset as security, the first thing we have to find out, because movable asset, there is a stock statement which customer has to fill the stock statement. Sorry, not the customer. You had to fill the stock statement. Inspection report. When you are carrying out the inspection, there are most of the institution they are having a most of the institution, they are having a stock statement. Sorry, they are having a this thing. So there is a stock statement, what you call in that stock register. In that register, there is a what you call inspection report. The banks, they have their own inspection report format. In that particular format, there is a column which asks what is the age of the stock. What is the age of the stock? So there's a column which says what is the age of the stock. So when you say the age of the stock, when you say the age of the stock, what do we mean? Now, when you are carrying out an inspection, the inspection form itself, number one priority is to find out what is the age of the stocks. When you say age of the stocks, what do we mean by the age of the stocks? Can you all tell me what do we mean by the age of the stocks?
Like useful lifetime of the stocks.
Sorry?
Useful lifetime.
Can you repeat it?
Useful lifetime of the stock.
No, not the useful item. When you say in the inspection report,
Sir, useful lifetime.
Useful lifetime, not the lifetime. Now, when you say inspection age of the stocks, we want to find out what is the age of the stock. That means how long these wristwatches have been in the showroom. That's what we mean. When you say age of the stocks, we are not interested to find out when this wristwatch was manufactured. We want to find out we are not interested to find out when the wristwatch was found out. Any other thing?
Sir, are we checking here whether the stock is obsolete or not?
Yes, very good. Yeah, that's right. You have come to that. Very good. That is our answer. We want to find out whether these stocks are obsolete, old stocks. Very good answer. That is what we want to find out. When you say age of the stocks, we want to find out how long these stocks have been in the showroom. Now we want to find out whether these are all, whether we are interested to find out whether these are new stocks or whether they are old stocks. So we ask the customer. The first question we ask the customer: you have 300 million worth of wristwatches. How long you have been having these wristwatches in the showroom? To find out whether these are old stock. If the customer says, I have been having these wristwatches from the day I opened the shop. When did you open the shop? I opened the shop in 2018. I opened the shop in 2018. From the day of opening, I am having the stocks in my showroom. Is it a good thing or a bad thing?
Bad thing, sir.
Bad thing, yes. Very good. It's a bad thing. Why? You know very well, these are old stocks. Not only old stocks, these stocks are not moving, fast moving stocks. So remember, that is a question you will have to answer when you say age of the stocks means not the day from which it was manufactured. We want to find out the date from which it has been there in the store, in the showroom. That is what we have to find out. How long these stocks have been in the showroom. So if the customer says these stocks have been there from the date it has been opened, that's a bad thing. Is it clear to you all? If the customer say these stocks have been there from the date from the day I opened the showroom. When did you open the showroom? In 2018. From the 2018, I am having the stocks. That means not only these stocks are old, these stocks are not fast moving items. Am I correct? So here, like House of Fashions, this customer is trying to give you old stocks to you. Am I correct?
Yes, sir.
Yes. So that is the number one item which you have to comply. So age of the stocks, not the date from which it was manufactured. How long these stocks have been here in the showroom. So if the customer says these stocks have been in the showroom from the day I opened the shop, that means you can't take those wristwatches as security, because you know very well these there is no market for these wristwatches. 3 years this customer has been 3 years this customer has been operating this business, and for the last 3 years this customer has been having this wristwatch in his showroom. That means he is unable to sell the wristwatches. So now he is coming to the bank to pledge as security, to give as securities a consignment of stocks for which there is no market. Is it clear to you all? Is it clear? Is it clear? Yes. So even on the contrary, if the customer says these stocks have been here since last month, is it a negative aspect or a positive aspect?
It's a positive aspect.
Positive aspect. You know why? Because these are new stocks. So remember, movable item, when you are carrying out an inspection, because as I told you, you don't have the assistance of any external authorities. The bank is dependent on your judgment. So in your inspection form, the first question is age of the stocks have to be ascertained. You have to find out. So it's a difficult task. I know it's a difficult task. Now, wristwatches also difficult. So like that, the textiles or whatever, it's a difficult task, but you have to do it. Your bank is, sometimes you may have to spend the whole day inspecting some other outlet. You may have to go and spend. We have spent whole days. For the whole day we have spent sometime with our checking everything. So you have to ascertain that. Once you are satisfied with that aspect, then comes the next item. What is that? Marketability of the stocks, movable, to be ascertained. Marketability. Now, when you are taking mortgage over stocks, why are you taking mortgage over the stocks? Because in case of a necessity, in case of an eventuality, you have to go and sell these stocks. In case of an eventuality, you have to go and sell these stocks. So you have to find out who are the people. You have to find out who are the people who is going to buy these stocks. You may ask yourself, you will ask the customer, your Omega wristwatch, you are selling for 2 million. What is the price of Omega wristwatch you are selling? Customer will say, I am selling it for 2 million. That is my selling price is 2 million. Omega wristwatches, I am selling for 2 million. So you as a not only a bank officer, you are as a marketing officer, you have to find out whether there is any market. You will ask the customer, who are the people who are buying wristwatches? Are there people in Sri Lanka who are buying wristwatches for 2 million? Now, at a time when the country is facing crisis and crisis after crisis, we are having a problem with with various things. Cost of living is very high. People are finding it difficult to survive. In the midst of all these difficulties, are there people in Sri Lanka who are prepared to spend 2 million to buy a wristwatch? So you will tell the customer, unbelievable. I don't believe this. Are there people in Sri Lanka who are spending 2 million on wristwatches? So customer will say, yes, there are people. Then you will ask the customer, satisfy yourself. Then you will ask, how do you satisfy? You will ask the customer, sir, can you give us a list of sales you have done for the last 6 months? We want to find out who are the people who have bought wristwatches from you for the last 6 months. So these are all confidential. You cannot go and disclose this to your family members or anyone. So the customer, banking is confidentiality has to be maintained. So in confidence, customer shares that information with you. Customer shares that information with you. Customer will tell you, I am, I can give you the list of sales for the last 6 months, but you will not disclose. So you tell the customer, he trusting you and giving the list of customers who has purchased. So when you go through the list of sales for the last 6 months, you are stunned. Why? Some of the leading personalities, politicians, business magnates, actors, various personalities, well-known personalities, they have bought wristwatches from this particular customer for 2 million within the last 6 months. So when you see the list, you are asking the customer, these are the people who have bought. So the customer tells you, yes, sir, they are the people who have bought these wristwatches, and they not only they have bought wristwatches from me, sir. Every 6 months when the new stock arrives, I inform these people. They come and change the wristwatch. They come and buy the new stocks. There are people like that. I know, personally, I know there are some people who have a craze for wristwatches. They spend big amount. I have not come across anyone who has spent 2 million, but I have come across people who have spent 2 lakhs and 3 lakhs on wristwatches. Personally, I have come across such people. But I have not I have not come across anyone who has spent 2 million. But this customer, they are selling, because that's why they advertise in the paper. They are boldly advertising in the papers. They are selling Omega wristwatch 2 million. So then they are showing you the list of customers, list of sales done by them for the last 6 months. Then when you go through the list, you are convinced to some extent that this has a ready demand. So you will not have any marketing problem. In case of an eventuality, you are convinced that you will not have any problem in marketing these stocks. Am I correct? So when the list is given to you, you have come to the conclusion. The customer has satisfied you. He has submitted documentary evidence to satisfy you that these wristwatches, in case of an eventuality which may arise in you taking over the stocks, you will have no problem in disposing these wristwatches for which there is a demand. Am I correct? So by showing the list, so that is what is called marketability of the stocks. Is it clear to you all? Is it clear? Is it any questions on that before I move to the next one?
Sir, now if in case the age of the stock is now the customer's information is not reliable, is there a way that we can ascertain whether there is a contradiction?
Yes, that's right. It's a very good question. I am coming to that. The next item is that.
Okay.
The next item is that. Good question. Yeah. How do we now only on satisfaction of the aforesaid factors securing the facility against such? Now your question on the age of the stocks. Age of the stocks. Okay. Customer, when you ask a customer, it's a very good question. When you ask a customer says 6 months. So are you going to accept the customer's word? And even the value 2 million, are you going to accept the customer's declaration saying this is the price at which I am selling it? No. So a customer will have to produce documentary evidence to satisfy you When you ask a customer, "Sir, how long you have been having the stocks at the showroom?" If he says for the last 1 month, you will not take the customer's word. You will want the customer to produce documentary evidence to satisfy, to confirm these stocks have been there only for the last 1 month, and this is the value. So he had to produce. He may have imported these stocks through a bank. He may have opened a He may have opened a letter of credit or through some bank. So he had to submit those documents to you. There, the wristwatch's serial number would have been given. So you will have to cross-check with the documentary evidence which he has given, with the documentary evidence our customer has given. You have to cross-check with those documents to ascertain the age of the stocks and also to ascertain the value of the stocks. Now, if he says 2 million, how do you know whether these are original wristwatches? When he says 2 million, how do you know whether these are original wristwatches? We don't know whether these are the duplicate wristwatches which he has purchased at Majestic City is showing to you. So you have to find out whether these are original wristwatches. So to satisfy you, he'll have to submit documentary evidence to prove these wristwatches I purchased, I imported through this bank. These are the documents. So you cross-check with the document. Their serial number would have been given. The original value would have been stated in the document, everything. So through that, you will come to some satisfaction that these are original wristwatches. Am I correct? Any questions on that? Any questions on that? Any question? Any question before I move? Is it clear to you all now? Is it clear?
Yes, sir.
Yes. So now, after doing that, marketability of stocks also I have touched on that. So after doing all those, after satisfying yourself about these 4 or 5 aspects, only on satisfaction of the aforesaid factors, securing the facility against such assets should be considered. So only after satisfying yourself against these aspects only, you can consider securing the facility against such assets. Is it clear to you all now? Any questions on that? Because this is a very important topic, important discussion, because this is a high risk security. Whatever doubts, clarifications you have, this is the forum for you to clear it. Any questions on that? Any questions?
Sir, one question. Would it be ethical for us to check with the supplier of the products? Would it be something ethical to do?
Independently, means you can check it. It's a very good question. It's a very good question. Independently, without mentioning the customer's name, you can find out from them as a banker. You can find out. I just want to find out what is the price of these wristwatches. You can just find out without mentioning the customer's name. Independently, you have a right to make inquiries without the customer's concurrence, because we have to do it very carefully. The reason is when you are doing such exercise, you have to be very careful. It could even strain the relationship. Am I correct? Customer might say, "What is this? You don't trust me." So independently, you can verify. You can ask the customer, who are the agents you are. They say, we are the agents. So from who are your suppliers? He'll say, our suppliers are from in Switzerland. These are the people. So you can independently, now you have all the facilities. You can Google from the Google. You can check it from various mechanisms. You can check it to ascertain whether the customer is speaking the truth. Because now, unlike during our time, today you all are blessed with the advanced technology. So you can independently check with the customer check not with the customer, with the supplier to find out, because if the customer has submitted documentary evidence to prove to your satisfaction, it is okay. But still, if you want to go an extra mile, there is nothing which prevents you. You can use the technology, you can Google and go through everything to ascertain whether this customer is telling the truth, whether this customer. So there are so many other mechanisms available at your disposal now to ascertain whether this particular, to ascertain the actual value. So once a customer gives you this thing, as you quite rightly said, it is unethical for us to mention the customer's name, but independent verification we can always. Is it clear, miss? Is it clear?
Yes, sir.
Yeah. So very good question. Very good question you are asking. It's also a very good question. Independent. If you are a prudent banker, you will also go an extra mile by doing an independent verification, because you have to the major risk is you are having a problem, you are having a difficulty because you can't get the support of any external authorities. So once you have complied with that only, you have to go for the mortgage. Now, before I go for the next slide, now it's 10:30, I'll give you 5 minutes for you to relax for a while, or 5 or 10 minutes. 10:40, we are supposed to end this at 12:30 or 12:45. 8:30 we started. So we will meet in another 10 minutes time, we will meet. So you can relax and come back within 10 minutes. Is it okay? Now, right. Now, coming back to the session, mortgage of stocks in trade and the risk involved in obtaining such security. I have explained to you all the risk involved in obtaining such securities, constraint in identifying the stocks offered as security, ensuring its appropriate value. The value of stocks may become zero overnight. Remember this House of Fashion experience, and also the this wristwatch agent. He can overnight he can dump all these stocks into a suitcase and remove it, and even a merchant who is dealing in tiles or whatever the item, they have the option overnight they can remove all the stocks. Then inability of the bank to have an effective control. Then the borrower could pledge the same stocks to another institution by telling the same old story, which cannot be prevented by us. Now, steps to be followed in securing the movable items. Make a note of this particular slide. This slide plays a major role in answering the question, because there will be a question on movable asset. That question we will be posing the question in different forms, but to answer that question, this particular slide will play a major role. You can answer in your own way, but this is a general guideline. So age of the stocks, movable age of the stocks. When you say age, what we want to find out is how long these particular stocks have been in the showroom, not the day from which it was manufactured. Then marketability of the stocks. Now, whether there are people in Sri Lanka who are willing to spend 2 million on a wristwatch, there are people. That's why they are advertising now. So even they are openly advertising that they are selling Omega wristwatches for 2 million. So we have to find out. Then they will give you the list of stocks. Details of the sales which they have done it for the past 6 months. When you see the list, you are amazed, you are shocked, you are stunned. These people, well-known personalities, they have been buying wristwatches on a regular basis from these customers. So he says every time when they get a new stocks, he informs them, they come and purchase. Then only on satisfaction of the aforesaid, only on satisfaction of the above stipulation, securing the facilities against such asset should be considered. Now, before I move on to the next topic, now here in this particular slide, when I explain to you all the risk, the final point which I have highlighted is borrower could pledge same stocks to a variety of banks. Now, the borrower, in movable, as far as movable stock assets are concerned, he can come to the bank, take a loan from you, pledge the stocks, and after taking 100 million, he can go to another bank and tell the same story to that bank and take a loan. Then how do we prevent it? We have no way of preventing that, because you can go and, but the banks are having, they are taking a simple precaution which is available at our disposal. Now, if when the customer comes to you, you will ask the customer, so have you mortgaged these wristwatches to any other banks? So customer will tell you, no, I have not mortgaged to any other bank. Are you sure? No, we are not mortgaged. Because unlike immovable, even though the customer tells you are still, you don't want to take the customer's word, the legal officer, the branch lawyer, they will confirm to you this particular property is free of any encumbrances, free of any charge. But here when the customer says, no, I have not mortgaged to any other institution, you will accept that. You will accept that customer's word, because but there is nothing else you could do. But you are taking a simple precaution. You are taking a simple precaution to ensure the customer is speaking the truth. What is the precaution you are taking? Can you all tell me? What is the precaution you are taking? What is the precaution you are taking? You are taking a simple precaution. Even though the customer tells, I have not mortgaged this to any other institution, you are taking a simple precaution to ensure that he is telling the truth. Nothing but the truth. Because the danger you are having is he can go to after taking the loan from you, he can go and remortgage the same stocks to another institution. So you are taking a simple precaution. What is the precaution you are taking?
Letter of undertaking?
Letter of undertaking. You have come somewhere closer to that. Somewhere closer.
Sir, insurance?
Not the insurance.
Sir, insurance certificate?
No, insurance, I will tackle insurance separately. Now here, it's not the insurance. You can always, you can go and you can take an insurance covering your vehicle from so many insurers you like. Nothing prevents you from taking it. So insurance will not give you the cover, but you are taking simple down. You said letter of undertaking. That's correct to some extent. Sorry?
Affidavit.
Yes, very good. Affidavit. Very good. You are taking affidavit. Affidavit, something like a letter of undertaking. Letter of undertaking is different. But when you say affidavit, so you are taking an affidavit from the customer who confirms to you, who swears that I have not mortgaged these stocks to any other institution. So that is a only simple precaution you are taking when you are taking movable asset as security. This is the simple precautions. This is the simple precaution which you are taking. Nothing else. You are taking the mortgage. After that, you are getting an affidavit from the customer saying that he says, I have not mortgaged to him. He will say in the affidavit, which will be, certified by a justice of the peace, in which the customer says, I hereby confirm that I have not mortgaged these stocks to any other institution, and these stocks are free of any charge, encumbrances, lien. So that is the most important document what you have got from the customer. But there are instances, even after giving that affidavit, there are some customers who have gone and mortgaged. We cannot prevent that. There are instances we have come across. I have come across many such instances. Even after giving that affidavit, the customer has gone and mortgaged the stocks to various other institutions. We cannot prevent it. We cannot prevent it. So when you go on inspection, when you ask the customers will say, yes, these are mortgaged to this bank, these are mortgaged to that bank. And so we cannot prevent it. But at least to give us some comfort, we are taking an affidavit. So remember, you have to take an affidavit. In addition to the mortgage, you have to take an affidavit. So that is very important. Good that you all gave the correct answer and the very valuable questions you all are asking. I am very happy about it. So now, steps to be followed in securing movable assets. We have detailed statement of stock, thereafter inspection, all the mechanism, age of the stocks movables, then marketability of the stocks movable to be ascertained. Now, when you say marketability of the stocks, and when you say age of the stocks and the reliability of that particular value, what is stated 2 million, somebody asked, very good question. you can do independent verification. You can do it. You can always. It is if we mention the customer's name, it is unethical. But independently, nothing prevents you in making an independent verification, which will be appreciated by your approving authority. They will say, no, you know, this particular manager or credit officer, they have done an independent verification, which will be appreciated by your manager. So you have nothing prevents you from doing an independent verification. A prudent manager will always do an independent verification. After doing all this, still you will go an extra mile. Why? Because here you are the sole authority on which the bank is dependent to ensure the safety of your exposure. Unlike immobile, where you have the support or assistance of the lawyers and valuers. Here you are. So you have nothing prevents you from doing an independent verification. So if it's a wristwatch, you can even the Google, you can put Omega, Rolex, who are the agent, what will be the price in Sri Lanka, that will give you. So but when you are checking the stocks, you have to see whether the stocks which are available at the customer's warehouse at the showroom are the original or the duplicate one. How do you find out? There are ways. You can check the serial number, you can check. So all those things you have to ascertain, because otherwise what happens is the duplicate stocks, he would have given you the duplicate of the wristwatches which he is giving are not the branded one. These are all unbranded items. Even when you take for instance mobile phones, iPhones. If you go to Peta, first cross street or second cross street, I think somewhere there, you can see iPhones, Samsung phones are being sold at the payment. These are all duplicate items. So you will be exposed to such risk of even supposing it is a mobile phone operator, he is selling mobile phones. You don't know whether these are original mobiles or duplicates. So you have to do an independent verification. Now remember, these wristwatches I have given you as an example because it's a high risk security. The same procedure which is listed here is applicable to any type of asset, movable asset, which is given as security. Only on satisfaction of the apposite factors, securing the facility against such assets should be considered. Now, okay, now you are granted the facility. Now you are granted, you have checked everything, you have done an independent verification, marketability of the stocks also, you are ascertained who are the people who are buying these stocks according to the customer, some leading personality. So he has confirmed, he has given you the sales sales details for the last 1 year or 1.5 years he has given. So you have come to the conclusion there is no problem. Even if we have to sell the stock, we won't have any problem. And you have taken the mortgage, executed the mortgage, released a loan of 100 million. Because your management has told you, you can release a loan of 100 million only on completion of the documentation, only on the execution of the mortgage and all these conditions which you have complied, because the ball is in your courts. Approving authority doesn't ask, they won't tell you to get their prior approval to release a loan. They will simply say, we have 100 million rupees we have approved against a mortgage of wristwatches. On satisfactory completion of the documentation, you can release a loan. So you are going to release a loan. So you have released a loan. After releasing the loan, now comes the next step. You are going to have difficulty in the sense you will have, there are certain follow-up because you are going to have sleepless night. Why I say sleepless night? Because you will be exposed. There are certain follow-up mechanism which you have to comply. Look at this particular slide very carefully because there will be a question on this also. What are the follow-up action you have to take once you are granted the loan, 100 million against movable items? You are telling the customer has agreed in the letter of offer. You have told the customer, we have granted, we have approved 100 million loan subject to the undernoted. What are the undernoted conditions? Number one is mortgage over movable asset, wristwatches. Then what are the follow-up now? Immovable property. Let me ask just to refresh your own memory, let me ask a question from you. For immovable property, what are the follow-up items? What are the follow-up action you have to take on immovable? I am asking question for you because there will be a question on that. Immovable. What are the follow-up action you take on immovable property? Can you all tell me? For immovable, not movable, immovable. Immovable. What is the most important follow-up you have to adhere to? Immovable. What is the most important follow-up?
Stock
Sales
inspection.
No, immovable. Immovable. I am beyond the subject of immovable. I am asking immovable. What is the follow-up? Immovable property.
Annual inspections.
Yes, I mean annual inspection. Very good. Then another one. I explained to you all.
Annual insurance.
And
Renewal.
insurance. Yes, that is okay if they are a building insurance. Apart from that, the most important thing on immovable item, I told you, you had to follow it up on immovable. Refresh your own memory. For immovable, I said.
Authority payments.
That's right. Assessment taxes, immovable property, annual inspection. Apart from annual inspection, payment of assessment taxes on immovable property. But movable, for movable, there are certain follow-up actions. Number one, periodical and preferably surprise inspection should be conducted to ascertain the availability of stocks, movables, mortgage. You have to carry out periodical. Now, the ideal situation is, ideal follow-up is every month you have to carry out inspection. That is the ideal situation for movables. But I know in many banks, they don't do that. But we recommend every month you have to carry out an inspection, because you have in the letter of offer, you have made that a condition to the customer. You have told the customer you should allow the bank officials to inspect, visit your showroom every month. Customer agreed, he can't turn you away. So every month you have to carry out an inspection. Every month you have to carry out an inspection. Every month you have to carry out an inspection. And why you are carrying out inspection? To ensure the availability of stocks. Number two, the customer has to submit monthly stock statement. He has to submit. The customer will have to send you a monthly statement of stocks. He will send you a monthly statement of stocks. That is one of the conditions. Now he has, at the time of granting the loan, he has showed you, he has given you a stock statement for 100 million. At the time of granting the loan, he has given you, not 100 million, he has given you a stock statement for 300 million. He said 300 million worth of wristwatches he was in possession at the time of carrying out the inspection. So it is one of the conditions under which we have granted the loan. The customer should at all times should be in possession of stocks to the value of 300 million. He must at all times, he should be in possession of stocks to the value of 300 million. Every month, at all times, he should have stocks to the value of 300 million. So how do you ascertain? By calling for periodical stock statement. So this customer, every month, he has to send a stock statement to the bank confirming the value of stock. So every month, he will send a stock statement to you. You will get a stock statement from to the bank, from the customer. He will say 300 million. So when the statement comes, you will check the statement to see whether 300 million stocks are there. When the customer sends the statement, you are not just filing the statement. When the customer sends the statement, you check the statement. He says, today, January, I am having, end of January, I am 31st January, I am in possession of stocks to the value of 300 million. So when you get the statement, you are satisfied, you are happy, still he is maintaining the stock level. In February, when you send the statement, you find this customer has sent a statement saying that he has 250 million. Then you are alarmed. Why is this? He is having 250 million. Because in one of the conditions now, say, when he sells wristwatches, new wristwatches would have come in. So one particular month, when you got the statement, you find that he has only 250 million worth of stocks. At the time of granting the loan, he had 300 million. One of the conditions, he should at all times have 300 million. So when you see that the stock level has come down, you have a right to ask the customer, so why your stock level has come down? You have a right to ask the customer. Then the customer will tell you, no, I have sold some wristwatches. So if you have sold, what happened to the money? You had reduced the liability. If the provider, supposing if the margin has come down, you have to tell the customer, till you get the next consignment, we may have to put a hold on your account, or you may have to reduce your outstanding. So that is the reason why we are getting the stock statement. So every month, it is one of the conditions. I gave you 300 million as an example. So you have when the stock statement every month, when the stock statement comes, you have a right to ask the customer to find out whether the stock level is still adhered to. The original level is still adhered to. If the level has come down, then you have a right to ask the customer why the stock level has come down. At the very outset, I explained to you all how in Main Street, when I went to a particular outlet where I was asked to carry out an inspection, the customer had only 3,000 rupees. How did it drop to 3,000 rupees? Why? Because that particular branch which granted the facility has failed to call for periodical stock statement, failed to adhere to the follow-up stipulations. They have not carried out the inspections, follow-up inspections. They have not followed up the monthly stock statement. As a result of that, the customer was able to play around, and ultimately what happened when the facility went bad, while we were executing the legal action, customer has removed some of the stocks. So ultimately when we got the court order to execute the writ to take over the stocks, he had only 3,000 rupees worth of stocks. So remember, even though the parate action is available to this particular movable asset, it is not practical. Then after that only comes the insurance, because insurance, I will explain to you all insurance, separate forum that in the follow-up slides, you have insurance. I am taking insurance separately. So is it clear to you all before I move to the next slide? Is it clear to you all?
Yes, sir.
Any question? Yes. Right. So now look at this particular slide. Now this was captured by me. I saw this was published in the newspapers in Majestic City. In Majestic City, during the first lockdown, first wave, many outlets in Majestic City was closed. Now here you could see overnight they have removed the stocks. Overnight they have removed the stocks on which you have no control, because Majestic City, some of the outlet, not only Majestic City, many people who are involved in the business today, they are finding it difficulty to survive. They are unable to pay the rent. Even Majestic City authorities, they waived off the rent for certain customers, but still for all, some of the customers, they are vacated. Why they couldn't? So suppose now you could see overnight stocks have been removed. So if these stocks were mortgaged to your bank, if these stocks were mortgaged to your bank, see the risk you are facing. If you are not carried out periodical inspection, you will be sitting only on a mortgage because the stocks have become zero. Now these are all Majestic City. I have taken this from this thing. These are all Majestic City one. As an example, I showed you all. So now this is the risk you are facing. Overnight, the stocks have been removed. Overnight, the stocks have become zero due to the lockdown, due to the COVID-19. Overnight, these stocks have become zero. So if you have to periodically carry out inspection. If you have carried out periodical inspection, even though the stocks have become zero, you would have, to some extent, you would have mitigated the risk by asking the customer, where have you taken the stocks? Where have you taken the stocks? Because the mortgage what you have executed over that particular stocks empowers you, gives you the right, provided these stocks are located or shifted to another location within the same district, you are covered. So you can ask the customer. So that's the reason why during the lockdown, during this particular lockdown time, we had to find out, even though the stocks have become zero, you have to ask the customer, where have you taken the stocks? Now, if I ask you another question, can you name one industry which is adversely affected due to this COVID-19? Your answer will be hotels, tourism. That's the obvious answer. Apart from this, can you all tell me what is another industry which is what you call affected due to this lockdown, due to this COVID? Can you all tell me? Due to this COVID, another hotels, tourism, completely gone. But apart from that, can you all tell me another industry? Now working from home, now a lot of people are working from home. As a result of that, one particular industry is adversely affected. Can you all tell me, according to you? According to you? What is the industry which is adversely affected?
Transportation.
Yeah.
Sorry? Transportation, yes. Then what else? What else?
Textiles, ready-made garments. And
Yes, very good, very good. That was the answer I was expecting. Textiles, ready-made garments. Why? Because this working from home concept has resulted in having an adverse effect on the people who are selling textiles. Why? There is no necessity for you to go and buy shirts or garments and all. Why? You are working from home. Now, see, when I was, now I am retired, when I was working, almost every month I used to visit Hamidiyas. Not only for me, even to buy birthday gifts and all for various people, I used to visit. Now, after this lockdown, I am getting, now on my birthday, I got a message from Hamidiyas telling me, sir, today is your birthday, we wish you a happy birthday. And because due to your birthday, we are giving you a discount, 20% we are giving discount. And this is valid only for 2 or 3 days. But I didn't utilize it. As a matter of fact, I have not bought a single shirt after this COVID. I have not expended a cent on any textiles. Why? There is no necessity even to go and lecture, because we are conducting all our lectures from home. So there is no necessity for us to go and spend money on these garments. So similarly, textile industry is adversely affected, because I was listening to one of the apparel industry president or somebody, he was telling that they are greatly affected. And he said their industry is greatly affected. Why? Because of this working from home concept has deprived them, because there is no necessity for you to go and buy textiles and all. You are working from home. So if you have to go to office regularly, then you want to change your dress. You want to go and buy new material. So they are adversely affected. So this is also another eye opener for us. For if we are taking movable item as security, if we are taking a mortgage over movable, if you are taking a mortgage over textiles, stocks, garments and all, we have you have a problem. Why? So here overnight the stocks have become zero. So you have a right to find out. You can't just sit and say, because of the COVID, we are not going on inspection. You have to carry out inspection. When you go on inspection, you find 75% of the shops which are the stocks which are mortgaged to you, they have removed it. They are removed. It has become zero. So you have a right to go and ask the customer, how did this become zero? Where have you taken the stocks? So the customer may say, I have shifted the stocks to another location. Why have you shifted? Because to save on the rent. He may say to save on the rent, because we have to pay 2 or 3 lakhs rent to Majestic City. So because of that, to save on the rent, we have removed our stocks to a new location. So even though they have removed the stocks to a new location, that gives, under the mortgage, that is covered, because when we execute the mortgage, we are telling the customer, we are taking a mortgage over the stocks which are mortgaged to us, stored at this particular location, and even if the stocks are removed to another location within the same district, that the existing mortgage what you have covered is covered. So see now these are just an eye opener for you. See the risk you are having. So if you are a branch manager, if I am a branch manager, if I will, during the COVID crisis, I will examine all my portfolio to see the portfolios, the portfolio which are the facilities which are covered against, secured against movable items. Immediately I will carry out an inspection. Immediately you will have to carry out an inspection. So you can't take comfort under the lockdown, because as a banker, you have got the permission, authority, you have got the pass to carry out an inspection. So you have a right to go and carry out an inspection. You can't say that just because of the COVID, I have not carried out an inspection. You have to ask the customer for the stock statement. So when there is a crisis, only your responsibility gets wider. So these are the risks we are facing now today. Bankers, I am sure all the banks would have advised their their staff immediately to carry out, to have a closer look of the stocks of the facilities which are secured against movables. You can't go and take over the stocks. If the customer comes and tells you, sir, can I come and hand over the stocks? No, we don't take over the stocks, because that will be another headache for us. So we have to ensure that we take over comes as a last option. So even though under the Parate action, we have a right to take over the stock, we don't do that. So these are the risks we are having. Any questions on that? Any questions? Any questions? Is it clear? You can, whatever doubt you have, because there will be questions on this, whatever doubts you have, you can ask. Any questions? So everyone is affected by this COVID-19. Everyone is affected by the, even we are also affected by the COVID-19. Bankers are also affected by the COVID-19. Everybody is affected. So sometimes you find, when they say you can't talk to a neighbor, you can't talk to somebody, you can't visit somebody, you can't go to the church, religious places, you can't visit your relation, you can't visit your friends. So sometimes, it's very frustrating. But what to do? We have to carry on with this. Any questions on this? Any question? Any doubts on the board? Because it's a very, very important topic. As far as bankers are concerned, it's a very important topic. Why? Billions have been granted. That's why we are taking a very high rate of interest. Any questions on this?
Sir, can't we use personal guarantees to support this matter, sir, in any way?
That's right. Yes, it's a very good question. Whether we can take a personal guarantee, it's a good question. But miss, according to my experience, when you are taking a personal guarantee, that is a very weak security. If you ask me about based on my banking experience, I have never come across a situation when a customer defaults, you write to the guarantor and ask the guarantor to come and pay it. Do they pay it? Do they pay?
No.
No, never. It never happens. I have not come across a situation. Well, it's a very good question whether we can take personal guarantee. We can take a personal guarantee. It's just a comfort we are taking. So if you are taking a personal guarantee, if the principal borrower defaults, you write to the customer, guarantor demanding the payment, but they never come and pay it. We have to go to courts. We have to file legal action. Then when you go to courts, the guarantor also will come, guarantor's lawyer will come and say, sir, my client has no means of settling this facility. So you can't send the guarantor to courts, to prison. You can't send. So personal guarantee, it's a very weak security. That's why now today even most of the banks are not taking personal guarantee. We are taking personal guarantee. We may take the director's personal guarantee, or we may take the personal guarantee of some high net worth owners, so high net worth people. But still, if the customer defaults, we can sue the guarantor, but that is, the cost is very high. So when you are taking movable, you can take as additional comfort, you can take the personal comfort, but it will not mitigate the risk we are having. So the mitigating the risk is in your hand. So if you are the bank manager, you have to check all your entire portfolio, and you have to ascertain the facilities which are secured against movable items to see. Now this particular slide, which it's a eye opener for you. Overnight, I have not visited Majestic City for the last 1.5 or 2 years. I have not visited. I don't know the present situation. But I was told a lot of people have vacated their outlets because they were trying to save on their rent. Because they had to pay Majestic City. I was told the rent range goes from 1.5 to 2 lakhs, I think. So if they don't have any pay, who is the person who is going to buy wristwatches at this time, when they can't visit anyone, when they can't have parties, when they can't go for weddings? So who is the person who is going to buy what you call spend on garments? Then there is no way they could show that. Because you want to buy a shirt or something, when you have to go for a party or wedding, you want to change this thing. But when that option is not, when that luxury is not available to you, will you go and expend any money on that? No, you will not. So then you will have to know here overnight that it has become zero. Then you will have to have closer what we call interaction with the customer and find out from the customer, where have you shifted the stocks? What option or what are the action you are taking to dispose these stocks? And you have to do some follow-up and ensure the safety of your exposure. Is it clear? Is it clear?
Yes, sir.
Right. So now,
Sir,
yeah.
sir, yes, sir. If we take an asset declaration,
Yeah.
Can we enforce the asset declaration and?
Yes. You can take asset declaration. A very good question. If you get a asset declaration, because that's the reason why when we are getting a personal guarantee, we don't just take a personal guarantee. We give a application. We give a form, guarantor statement. There, the guarantor would have disclosed all his assets. Am I correct? The guarantor would have disclosed all his assets. Now, when we are taking a guarantor, we don't just take a guarantor. We will give a statement, guarantor statement to the customer, the guarantor, the prospective guarantor. We'll give a statement. There he has to disclose all his assets and liabilities. He'll have to disclose. He'll have to say, I am having a house at Barnes Place. I am having a house at Bott Place. I am having a house at Bathrambula. My total asset comes to 50 million. Like that, he gives a declaration. So based on the declaration only, we will decide whether we could accept this particular guarantee. So after taking that particular guarantee, we have to go to courts. We have to go to courts and tell the courts, now the borrower is bankrupt. So therefore, we have to get the guarantor's assistance to repay the loan. Here, at the time of granting the loan, he has declared he is in possession of these assets. Then the guarantor can always come back and say, yes, at the time of granting this loan, I was in possession of these assets. Now I don't have these assets. Then we'll have to counter that. We'll have to counter that means we'll have to do a land search at the land registry and find out whether he's actual owner, whether he is still in possession of the ownership. All those things have to be done. So after that, so it's a very tedious and difficult process. Am I correct?
Yes, sir.
Yes, it's a good question. It's a good question you asked, whether he has at the time of granting the loan, he would have given a declaration. Then even with the declaration, he can come to the courts and say, I don't have these assets, I have them. As a banker, it's up to us. It's left to us. We have to get our lawyers to do another search and see whether this particular guarantor is still in possession of these assets. If he is still in possession of these assets, we can go to courts and say, yes, he is in possession of these assets. Then the court may take all those factors into consideration, and then it may order the guarantor, no, you are in possession of these assets, so therefore you have to pay part of the loan or something like that. They may order, but still the guarantor also can get some lawyers to come and challenge that. Is it clear? So it's a very tedious process. Any other questions? Right. So now, this you could see now here all vacated. Did you all see this particular article about microfinance? It was uploaded in the system. Yes or no?
Yes, sir.
Right. So there will be a question on this. When you talk about the pledge loan, I think IBSL has uploaded. It is there in the system. This is when you talk about microfinance and pledge loan. Now we are coming to the same subject, movable assets and secure transaction law. Now what is this? Lending institutions are generally reluctant to grant facilities against movable assets, mainly stocks in trade, due to the high risk involved in accepting such security, because generally the lending institutions are reluctant. As a banker, we are reluctant. If you ask me, I am reluctant. If I am a bank manager, I am reluctant to grant a facility against movable, but can't help it. Because of the competitive environment, I had to grant. To give some comfort to the banks, the then government introduced a secure transaction law. They introduced a law defined as secure transaction law to provide some relief. What are the relief? Under this act, all charges created over a movable asset should be registered with the CRIB, which maintains the secure transaction registry. All the banks which have granted facilities against movable assets have been mandated, have been stipulated to register such charges with the CRIB. So if a customer comes and says, I have not mortgaged to any other institutions, in addition to the customer's, confirmation by way of an affidavit, we can also check with CRIB to ensure whether these charges are registered at the secure transaction registry. If you ask the customer, so have you mortgaged this to any other bank? He says, no, I have not mortgaged. But still, for all, you can check it with CRIB from the movable asset registry, whether any charge reflects as far as this customer is concerned. You check it with the CRIB, provided that bank which granted the facility has ensured its registration with CRIB. Supposing that bank also has forgotten, or if they have omitted due to an oversight in registering that charge will not reflect in the CRIB registry. So this is just a comfort. Lending institutions could verify the existence of any charge over a movable asset prior to acceptance. We can always check it with CRIB, but in addition to that, we can take a affidavit. So this is just a comfort because since the bankers are reluctant to grant facilities against movable asset, the government intervened and gave some comfort by way of this movable asset and secure transaction law to give some comfort. Any questions on that? So now, before I move on to the next subject, movable asset, I hope that is clear to you all. So now we have spent considerable time. I have explained to you all the immovable assets, movable asset. So before I move on to the next subject, do you have any questions? Do you have any concerns? Because you all asked a lot of very valuable questions you all asked. So do you have any concern? You can ask for the benefit of the others. I was told there are about 180 people who have enrolled, but I don't know how many of you are following live. But do you have any other questions? Whatever questions you are asking that is recorded, that is beneficial to the others also. Do you have any other questions before I move to the next one?
So if we let's say give a loan against movable machinery or something,
yes,
either loan or lease, so
yes.
how can we secure that machinery? So we can't.
Sorry, come again. If you are given a loan
against a machinery,
yes,
let's say movable machinery,
yes,
something like a harvester or something, then how can we secure this?
What machinery? Movable machinery?
Like harvester.
All right. Yes, yes, yes.
Then how are we going to secure that facility? Because
no, movable machinery, it's a high risk security. Now, when you say movable machinery also, it's something like a movable asset. It's a movable asset.
yes.
So it's a very good question, because movable, when you say movable asset, immovable machinery, you have no problem. Movable asset also, it is something like a movable asset, something like a stock. So there are also the customer will have to give when we take the mortgage, the customer will have to give us a confirmation. He'll have to give us a declaration to confirm that he will always ensure that this particular machinery is under his custody. For machinery, we can't ask the customer to send every month a statement, because at the time of granting the loan, we may have assessed the value of the machinery by getting a professional valuation from the particular agents. So thereafter, we have to carry out inspections. Every month, we may have to carry out an inspection to ascertain, to confirm whether this particular machinery is still under the custody of the particular customer. So if you feel this particular customer is a very vulnerable customer, you may have to carry out inspection monthly. Depending on the customer, on a case-by-case basis, you can decide the duration under which you have to carry out the inspection, whether it is necessary for 1 month. But your main idea is to ensure whether this particular customer is in possession of this particular machinery, because he can always go and sell this machinery to somebody. So, ideal situation is every month, or every quarter, or every half year, or annually, depending on the status of that particular customer. Is it clear? Movable machinery.
Yes, sir. Sir, if in case we are taking a simple lodgement, so
simple lodgement of what?
Let's say for in simple lodgement of a vehicle, or let's say removable property of vehicle, something. So is it possible to enforce any legal action against simple lodgement?
No. Simple lodgement, you legally you have no cover.
Thank you.
Simple lodgement, you have no cover. Simple lodgement of documents, no? You are saying?
Sir. Yes,
no,
sir.
that has no. We have no legal cover.
Oh, thank you.
You have no legal cover, unless, of course, when you are taking a simple lodgement. With that simple lodgement, if you take a letter of undertaking to mortgage, that has some cover. Am I correct? With the simple lodgement, you go one step further and get an undertaking from the customer to mortgage in case of an eventuality, in case of a necessity. At the request of the bank, I agree to execute a mortgage. So that is a letter of undertaking.
Right.
Is it clear?
Yes, sir.
Whenever you are taking a simple lodgement or document, remember always to ensure that you take a letter of undertaking with that simple lodgement. Now, there are banks which are taking simple lodgement. With that, you are taking a letter of undertaking to mortgage, where the customer agrees to execute a mortgage in case of a necessity, in case of an eventuality, in case a necessity has arisen for the bank to call for a mortgage, he agrees. So that's what is called letter of undertaking. So if you just take only the simple lodgement, that has no cover. But if you, with the simple lodgement, you take a as an additional precaution, a letter of undertaking, it has some validity. Is it clear?
Yes, thank you.
Right. So now we are moving on to now we have all we are covered immovable, we are covered movable. Now we are coming to the next type of security, advances against shares and debentures. Now this is also a high risk security. I call it a high risk security. Why do I call this a high risk security? Because here also, if you don't follow up, if you don't ensure the follow-up mechanisms are not fully adhered to, you have the danger of your advance being exposed to a risk. Now, how do you secure? Now, let us assume one of your customer comes and says, I want a loan of, he says, I want to get a loan of, he says, I want to get a loan against marketable shares. So he says, I am having shares of John Keel's. What is the value of John Keel's? I don't know the value today. He says, I am having 1 million worth of John Keel's shares. He said that is the value. I don't know the value today, but according to him, he says, so I am having John Keel's value, John Keel's shares. According to today's market value, the value comes to 1 million. The value comes to 1 million. He says that according to today's market value, the share value is 1 million. John Keel's value is 1 million. Then, can you grant against shares, 1 million worth of shares? How much can you grant? If a customer comes and tells you, I am having 1 million worth of John Keel's shares, how much can you grant?
500,000.
Yeah, 500,000. Yes, you will say you will grant 500,000. It depends. It may vary from bank to bank. It may vary. Now you can grant 500,000 because why? You are granting only 50%. Normal the general understanding is if we will grant 50% of the value of the shares, 50% of the market value of the shares we can grant. Some banks may say, no, we are granting only 35%. I could remember when we were at HNB, I don't know the present value, present status. When we were at HNB at that time, we were HNB stipulated, we could grant only 35% against the market value of shares. So if supposing if a customer has 1 million shares, we were mandated to grant only 350,000 rupees. So it depends from bank to bank. Some banks may say 40%, some banks may say 50%. I don't know the percent, but generally when we were there at that time, it was stipulated, we could grant only 35%. So that means I have 1 million shares, we could grant only 350,000 rupees. So why we can't grant 100%? Why can't we grant 100%? Because
the share value is changing, sir.
Yes, because the share value will drop. Because the share value will drop. So today the market value is 1 million. Or today you find the hotel shares and all. I have not checked the share market, but today there is no demand for the hotel shares. Tourism, why it has dropped? Because I was listening to the Sri Lankan Airlines CEO the other day. He was addressing a forum in some of the interview. The Sri Lankan Airlines CEO was telling it will take another two or 3 years for the travel industry to come to normalcy, it seems. So that means according to him, in 2024 only is the Sri Lankan Airlines CEO was telling. Only in 2024 there is some expectation the travel trade will return to normalcy. So that means even the tourism is fully affected. Tourism, hotel trade, airlines are all fully affected. So at this particular time, if we have taken granted loans to any customer against the shares of airlines or hotels, we are facing a severe risk. So that is the reason why even if the share value is 1 million, we are giving only 350,000 and 65%, that means 650,000, 35% we are granting. Now you said 50% you all are granting, that may be the present trend. And during our time, we were granting 35%. I don't know the present trend. So the 50% or the 50%, we are keeping the 50% to overcome any eventuality which would have arisen, which may arise. So if we have granted to a loans to a customer against John Keel's shares, or let us by John Keel, we'll take a customer, some travel hotel trade, Aitken Spence Hotels. We have granted to a customer 350,000 rupees. We are granted to a customer who was in possession of Aitken Spence Hotel shares for 1 million. But today I am sure Aitken Spence Travel hotel shares would have come down. Why? Because virtually all their hotels are closed. Virtually all their hotels are closed. So at that time when we granted the facility, the tourism sector was booming and hotel shares were at very high rate. So all of a sudden when this COVID-19 and this lockdown cropped up, we had to ascertain the marketability, the marketability of the value of the marketability of the shares and the value of shares. Then if we found the share value has dropped, naturally it would have dropped, then we will be compelled to dispose the shares. We will not wait till it comes to zero. We will check the market value. That's why the 65% the spread is there for us to play around. So we check when we are granting advances against shares. Daily we check the share market and we update our records. The system will give us now who are the customers who are having facilities against hotel shares. Then when we find the share, then we will be closely monitoring. I'm sure all the banks now they'll be closely monitoring all the customers who have availed facilities against hotel and tourism sector shares. Closely they will be monitoring it. And they would have taken preventive measures. What are the preventive measures? They would have taken preventive measures to dispose those shares. Now this lockdown started in 2020, March. So from March onward, these banks would have been closely checking their portfolio to ascertain the customers who have enjoyed facilities against shares of the hotel trade, tourism trade, apparel industry, like that various factors, vulnerable sectors, they would have checked, and then they would have, if they found these shares are declining, the value are declining, naturally it will decline due to the current situation, they would have told the customers we are selling. They will not wait till this comes to zero. They would have sold the shares. They would have sold the shares towards the recovery, towards the realization of their exposure. What authority they have to sell the shares? They are in possession of a power of attorney which the customer has given. That power of attorney is an irrevocable power of attorney. Normally, when you are giving a power of attorney to somebody, you can give a power of attorney. You can give a power of attorney to a child, your daughter, your son, your mother, or anybody. You can give a power of attorney. And later, if something has gone wrong, if your relationship has strained, you can cancel the power of attorney. You can put a paper notice and cancel the power of attorney. You say, the power of attorney, what I have given to so-and-so is cancelled. You put a paper notice, the power of attorney is cancelled. But in this power of attorney, but the bankers have taken from their customers who have pledged, who have given their shares as security. We are not taking such power of attorney. We are taking a power of attorney called irrevocable power of attorney. That's what we call it, a irrevocable power of attorney. This particular power of attorney cannot be revoked under any circumstance. You can't revoke it. Customer cannot revoke it. So we are in possession of that power of attorney. In other words, the customer has given a blanket check. So when we are granted facilities against marketable shares, it is one of the conditions we take a power of attorney, irrevocable power of attorney, and in the letter of offer we are telling the customer, we have approved a facility of 350,000 rupees to you against the shares of this particular company. Current market value is 1 million. And at any case, if the market value drops, we have a right to dispose the shares. So we will dispose the shares without notice to the customer. But as a matter of courtesy, we inform the customer, and then thereafter only we dispose the shares. So this has to be closely monitored. One of the conditions in almost all the banks, when they have a big portfolio, in HNB and all, they have a very big portfolio. When we were there, I could remember there was one staff member girl. Her job was every morning, to come and feed the market value of the shares into the computer, to the system. Then she will get a printout of all the facilities which are secured against various shares, and the system will give her the details and say whether the system will tell us whether your margin is still maintained. And if there is a drop in our margin, the system will indicate to us, will tell us. Then this girl will come and tell us, so these are the customers, the margin has dropped. Why? The market value of the shares which they have given as security, market value of shares or debenture, whatever they are given as security, has dropped. Then we have to take adequate precaution in reducing the liability. If it is an overdraft facility, we immediately reduce the limit. If we are granted an overdraft facility to the customer, we reduce the value of reduce the limit of the overdraft facility, for which we have got the concurrence of the customer. Now, I could remember one particular customer. One day he gave a call and said, "But it is you all have reduced my overdraft limit." Then I told this customer, he was very nice gentleman. I told him, he was a company director. Then I told him, no, because we have reduced the overdraft facility because the shares what you have pledged as security, the share value has come down. Then he was just laughing and telling me, so you all are happy to reduce the facility, but whenever the market value goes up, you all never increase the overdraft limit. So I said, no, we will increase. If the market value has gone up, then certainly we will increase the limit, provided you make a request. We don't just haphazardly go and increase the limit just because the market value has gone up. So if the customer makes a request to enhance the limit because the market value has gone up, we will certainly increase the limit. But the enhancement doesn't happen overnight unless the customer makes a request. But reduction in the facility, reduction in the limit, we have to do it, for which we are in possession of a letter of authority from the customer by way of a irrevocable power of attorney and the letter of acceptance. Letter of offer we have given. In the letter of acceptance, the customer has confirmed it. Then the fluctuation of the market value of the shares to be constantly monitored. Now, if there's a question, I think last time also there was a question, when we are granting advanced facilities against market value of shares, what is the most important follow-up action which we have to adhere to? The answer is we have to ensure that the market value of the shares are closely monitored. That is the answer. There was a question, I think last time also there was a question. What is the more? Because your paper will have 2-3 parts. First part will give you, there will be some simple questions, 1-word answer. First part will give you, there will be some questions, 5 questions, which you have to answer in 1 word. Then there will be another section where there will be brief. They will ask you to write brief your understanding, give your understanding in brief. That means in 1 sentence you have to give your understanding of in 1 sentence. Then the third one will be the major question, where there will be big questions on immovable and movable. So it's in other words, I must tell you all, if you follow this session very carefully, I could say it's a simple. All these will be simple questions which you could answer without any problem. Only thing is, because here, as I repeat, now unlike the previous exams, previous sessions, when we conduct the lectures, those are not recorded. Students come for the lectures. After the lecture, that's the end of the story. They have no way of going back other than the notes. But here you have the luxury of the recordings. I think last evening I was told IBSL, this morning before I started the session, I asked them, they said last evening they have put the recordings of my previous 2 sessions they have already uploaded. So it is there for you, today's session also. So until the exams are held, these recordings will be available to you. So it's easy for you to answer. After the exam is over, they will remove it. So any questions on this particular subject? Advances against shares and debentures. These are the follow-up action which you have to take it. When you are granting advances against shares, we had to follow up the fluctuation of the shares have to be closely monitored. Why? We have to ensure that the margin is always maintained. Any questions on this? Right. So if there is no question, I will.
Sir, are we going to change the what they call customers borrowing limit overnight if the prices are changed overnight?
Yes.
Oh,
We have right. If the customers, what your question is, the share value drops.
If in case are we going to monitor the change in the share value for a particular period and reducing, or
We have to ideally the share. That's what as I told you. Share value has to be monitored on a regular daily basis. It has to be monitored. It has to be monitored on a daily basis. Let us take for instance, if you don't monitor it daily, what happens? Take for instance, you have granted, just forget about this COVID-19, right? Forget about the COVID-19. Forget about the COVID-19. Let us assume the peaceful atmosphere which prevailed prior to 2020. Peaceful atmosphere which prevailed prior to the 2019, before the COVID and all. You have taken a particular hotel A. You have taken a mortgage, you have taken the shares of that particular hotel. All of a sudden, something has happened, and that hotel was destroyed overnight. Some explosion has occurred, and that hotel was destroyed overnight. What will happen to the share? That particular hotel share will drop.
Yes.
Am I right?
Yes.
It will drop. So that is the reason why we have to monitor the shares of when we are granting advance against shares, it is one of the conditions that we monitor the shares on a daily basis. That's what, as I told you, at HNB, when we were there was one particular staff member. Her job was to monitor the fluctuation of the shares on a daily basis. So she will get from the stock exchange, she will get the rates, and she will put the value to the listing, and the system will tell us. So daily that has to monitor. That has to be monitored daily. If you don't monitor daily, all of a sudden now see, if today the value may be 200 rupees, overnight it can drop to 150 or even 100 rupees. So then when we find the danger signal is there, we have to immediately take action to, if it is an overdraft facility, we have to reduce the limit. If it is some other facility, then we'll have to immediately tell the customer your market value of the shares what you have provided has dropped. So therefore, we hereby request you to provide us some additional security. Additional overdraft, of course, you can reduce the limit, even though he has exceeded the limit, you can reduce the limit, but then you can write to the customer and tell the customer to provide us with some alternate security or some alternate shares, because the shares what you have given as security is not adequate for us because the share value has dropped. Am I correct?
Yes, sir.
Right. So now, any other question from others on this particular subject? We are granting always 35, 40% or 50%, depending on the bank. It could vary from bank. I am not saying you should grant only 35%, but it depends varies from bank to bank based on the bank's particular credit policy. So now, any questions before we move to the next one? So now we have immobile property we have covered, immobile machinery we have covered, movable machinery we have covered, immobile machinery, then stocks we have covered. Now the wristwatch example which I gave you, remember that same example, that is the procedure I have explained to you all. Same procedure as we followed for any type of movable item offered as security. Now see, you will not get a question this time to say if a customer is giving wristwatches, because that question we have asked 3 or 4 years back. So this time there may be a different question. There may be a question where a grocery man, a person who is having a supermarket or a grocery shop, something like that. So the same procedure has to be adopted. What are the follow-up action? You know what are the follow-up. What are the follow-up action when you are taking advance against shares and debentures? These are the follow-up action. That means you have to monitor the fluctuation of the shares or debentures. So now we are coming to another important security. This is a very easy security, but still for all, even though it's an easy security, I have listed it here because millions of billions of advances have been granted against motor vehicle. This is also considered as a high-risk security. When you are granting advances against motor vehicle, the most important thing what we have to adhere to is we ask for the original certificate of registration. We ask for the original certificate of registration. Now, see, if you want to buy a car, first thing what you will want to do is you will want to carry out an inspection. You will go to the particular location or the place where the motor vehicle is there, and you want to check the motor vehicle. If it is a second-hand vehicle, you will check the motor vehicle. And once you are satisfied with the particular motor vehicle, then comes the ownership. So you will ask the customer, can I see are you the owner? Customer will say, I am the book. That is certificate. That is your title deed. The document every owner of a motor vehicle should possess, should have. So that is, in other words, that is your title deed. So that will give the details of the motor vehicle. What is the number of the motor vehicle? What is the color of the motor vehicle? What is the engine capacity, seating capacity, chassis number? Who is the current owner? Who are the current owners? Is it mortgaged to any other institution? Where is this motor vehicle kept? All those vital information will be disclosed in the CR book. So once that is given, then if you are a prudent buyer, if you are buying a motor vehicle from an unknown person, you have to be very careful because you could be taken for a ride. So you will go one step further and you want to independently verify with the registrar of motor vehicles. There are vehicles now. Recently, I came across a colleague of mine. He has bought a vehicle from somebody, and this boy told me, I bought a vehicle on trust. He has bought a vehicle from sales people, and he has taken a loan. When the bank has sent the CR book to RMB for registration, RMB people have refused to register it and returned it. Why? Because they have got an objection from the original owner. Original owner, even though he has sold the motor vehicle, maybe due to him not getting the full consideration, this man has sent a vehicle to the RMB saying that he is objecting. So because of that, when this boy has taken a loan from a bank, and when the bank has sent the registration CR book for registration, the RMB people have refused to register, saying that they are in possession of a objection letter given by the original owner. So fortunately, this boy, he has bought the motor vehicle from a car dealer. Immediately, he has rushed to the car dealer and told the car dealer, I have taken a loan, and the bank has told me that, he has showed the letter from the RMB. Then, fortunately, these car dealers have told, no problem, sir, we will refund the money. So he said, I have brought the car here I don't want this car, you give me the money. So they are refunded the money. They are refunded. See the risk you are involved. Because sometimes if the signature default now, so I could remember when I sold my previous vehicle, I sold my paper, I signed and gave all the document. Then even in spite of that, I got a letter, registered letter from RMB saying that we have got this thing from this particular vehicle owned by you. Your signature differs. They say your signature differs. Do you have any objection? And if you have any objection, please inform us within 14 days. If you don't hear from you within 14 days, we will be transferring the motor vehicle. So I didn't bother to reply because they have said if we don't receive your objection within 14 days, we'll transfer it. So I didn't reply. So like that, you have to be very careful because when you are buying second-hand motor vehicles. So today you can even check it online. You can check. I read somewhere. I don't know how far it's true. I read somewhere. You can check the ownership of the vehicle by paying 150 rupees online. You can check it. So remember, whenever you are buying a second-hand vehicle, even though the CR book is in possession with the customer, with the prospective seller, if you are buying from an unknown person, you have to be very careful because you could be taken for a ride. So you have the right to check with the RMB, with the CN. I think most of the banks are doing it. In addition to that, they also do an independent verification to check whether after paying the money, if the RMB doesn't register, if the RMB refuses to register the motor vehicle, then you are in a grave risk. And sometimes when the RMB send the objection letter, these letters, the similar letters which I have got, I of course didn't bother to reply. But some people may object. So that they may object at least to, they may think this is a good opportunity for us to get some money. They may object. I of course didn't object, but there are people who object. Now in this particular case, the original owner has objected. So that CR book is a most important thing. Then if it is a brand new vehicle, then you don't have to worry. If it's a brand new vehicle, you don't have to worry. You can, before releasing the loan, you can get supposing a customer buying a motor vehicle from a dealer. If he is buying a motor vehicle from a dealer, then the dealer will not have a CR book. He will not have a CR book. But when we come across such instances, we will request the dealer to give us a letter of undertaking to the bank. So the dealer will give a legally executed document. The dealer will say, in consideration of you are granting a loan to so-and-so, we hereby undertake to register the vehicle after the registration formalities are fully complied with, we will arrange to forward the CR book direct to the bank. Or if it's a lease facility, they will say, we will ensure that the absolute ownership is registered in favor of the bank. So the dealer undertakes the registration if it's a brand new vehicle. Then after you comply with these formalities, then comes the next hurdle. You have to get a valuation report. If it's a brand new vehicle and if the customer is buying the vehicle from the local agent, if it's a Toyota vehicle, and if the customer is buying the vehicle from Toyota company, then you don't have to get a valuation. Why? Because he is buying the vehicle from the local agents, dealers, sole agents. If it's a Suzuki, AMW, like that. So if the brand new vehicle, I'm using the word brand new vehicle, valuation report is not required, provided they are buying from their agent. That discretion is in your hand. You can decide. But if it is a second-hand vehicle, registered vehicle, if it is a registered vehicle, then we have to get a valuation report from an authorized valuer. Who are these authorized valuers? Most of the banks insist or they are comfortable in getting a valuation from the AAA, Automobile Association of Ceylon, because they are the internationally recognized institution. So they will not just give a valuation, Automobile Association, because I know when I bought a vehicle, I went to Automobile Association. They are, not only they checked my vehicle, they started the vehicle, the engineer The engineer came on a trial run with me in the vehicle. I went with the engineer. He wanted me to go up to Golface Hotel and come, sorry, not Golface Hotel, that Galadari roundabout and come back. You want to see whether Modi Sadhya he want to check everything. So their valuation is a foolproof valuation. So most of the banks are compatible with A value. I could remember HNB when we were there, they were insisting on a valuation from the Automobile Association. They were not accepting any valuation from others, but today, of course, they are accepting. So it has to, your bank will have various valuers, like this immovable property, your bank will have a panel. So the valuation reports should be submitted only from that panel of valuers who are authorized to value vehicle valuers, not from a garage, because garage person can manipulate it. So because that is very important. Then after that only, you will execute a mortgage, and that mortgage has to be registered with the registrar of land. In addition to the registration, it has to be registered with the registrar of motor vehicles. Because once, now when you are sending to the registrar of motor vehicles, the registrar of motor vehicle, you have to send it with the CR book. Then the CR book will come back to you. Registrar of motor vehicles will return the CR book to you, confirming that your charge has been registered. So the CR book will come back to you, which will confirm your charge has been registered. So once it is registered, you don't have to worry. The vehicle will, the customer cannot manipulate it because he can't do anything. He can't do anything without your concurrence because you are in possession of the CR book. But what is a mechanism? Let me ask you another question. What is a mechanism which is available at your disposal to ensure the customer is still in possession of the motor vehicle? Do we ask the customer every month you have to bring the motor vehicle and show? No. It is not practical. We don't do that. But there is another mechanism available at your disposal which will confirm the customer is still in possession of the motor vehicle. What is the mechanism? There is a simple mechanism which is available at your disposal to ensure the vehicle is still under your custody. What is it? Under the custody of the customer. Now we are granting a motorway loan against a motor vehicle. Once a customer takes a loan, he buys a motor vehicle. That's the end of the story. But we are taking the CR book, registration. It's registered as the RMB. But we don't go and carry out the inspection. We don't tell the customer we want to carry out the inspection. Can you come and show us the vehicle? No, we never do that. But there is still for all, there is a simple mechanism which is available with us. It's available at our disposal to ensure the customer is still having the vehicle with it. What is the mechanism? What's the mechanism? Think about it. A simple mechanism which is available at your disposal. Any guesses? Now, if you have a motor vehicle, and you have mortgage, you are taking a loan from the bank and bought a motor vehicle, you will be required to seek the assistance of the bank every year for something. For what?
License. Renewal license?
Yes, that's right. To renew the license, you have to get a document from the bank, neither. What is the document?
CR copy.
That's right. So you have to get a document from the bank. The bank will have to give you a confirmation to say, which will say that the CR book is under their custody, because you to go and take your revenue license, you have to produce an insurance. Then in addition to the revenue license, insurance and various other things, you also have to produce the original CR book. Either original CR book. So for which, if you are taking a loan, the bank is in possession of the CR book. The bank will never release the CR book. You go and ask the bank, I want to take the license, and you ask the bank to release the CR book, they will not give the CR book, but they will only give us a confirmation which is acceptable by the revenue authorities. They will say that this original CR book of this particular vehicle is under our custody. Under our custody. So when the customer comes and asks for that document from you, you know to some extent that the customer is still in possession of the motor vehicle. So if vulnerable customers, if you want to find out whether still the vehicle is under the, not all customers, vulnerable customers, bad customers whose loans have gone bad, very vulnerable. So you may be thinking we may have to dispose the vehicle. Then before that customer also will be compelled to come to you for the CR book, CR confirmation. So if that customer comes to the bank for that confirmation, a bad customer whose loans are in arrears, I know some banks will not give the letter also. They will tell the customer settle all arrears, after that only we will give you the confirmation. Then the bank may go one step further and say, we want to carry out an inspection, have you come in your vehicle, we want to see so the bank, before we issue the letter, we have to, that's a procedure, internal procedure. We want to give a confirmation to say that the vehicle is still in good condition. We won't say, we won't tell the customer, we want to know whether the vehicle, you are still having the vehicle, otherwise customer might, that might strain the relationship. We can only tell the customer, no, we want to carry out an inspection to confirm the quality, the present status of the vehicle, whether the vehicle is in good condition. So have you brought the vehicle? Customer will say, yes, I have brought the vehicle. So that is a simple mechanism available at your disposal. You can use it only if necessary, not for all the customers, because some customers may not like. So only for bad loans, where some customers' loans have gone into arrears. Before issuing the letter, you can ask the customer to settle part of the arrears, or you can even ask the customer, can you bring have you brought the vehicle? We want to check the vehicle. Because why I am saying this is, even with the registration of the charge at RMB, there are cases where some customers have manipulated and sold the vehicles. I'll show you. Some customers have manipulated and show you. So these are the precautions we are taking. Then we'll have to take the motor vehicle, we'll have to take insurance, comprehensive insurance. I will explain insurance separately. Any questions on that? Any questions? Now, motor vehicle, original certificate registration, valuation report, mortgage or lease, registration of the charge with the RMB, quality of the vehicle and its ownership, history, comprehensive insurance, full insurance. So remember, this particular slide gives you in a nutshell what are how do you secure an how do you secure a motor vehicle? Important aspects. These are the important aspects. Now, motor vehicle as security, valuable security, high risk security. It's a very valuable security, but at the same time, it's a high risk security. I will show you the insurance separately. Now, look at this particular slide. Now, because whenever I come across any important articles, what I do is I scan and put it here into my presentation so that it will be very, I can prove certain points. Now, you may be wondering, why should we ask for the vehicle? Because if the vehicle, we have the original CR book, we don't have to worry. See, the vehicle buyers taken for a ride on doctor registration paper. There are people who are now here. The police, they have caught some people. They were selling vehicles on doctor registration papers, because even in connivance with the RMB authorities, this has been done. You all will. I don't know how many of you all could remember when our president was elected. I think one of the institutions where he carried out on-the-spot inspection was RMB. President Gotabaya Rajapaksa, after he assumed these duties, he was going on inspection to some of the government sectors. RMB was one such institution where he carried out a surprise inspection, and some other people were transferred also, because RMB is a place, when you say RMB, people, the tendency there, they delay documentation and all those things. So here also you could see vehicle buyers taken for a ride on doctored registration paper. So you have to be very, very careful when you are selling when you are buying a motor vehicle, especially when you are buying a motor vehicle, registered motor vehicle, you have to be very careful. That particular boy from a bank, colleague of mine, he was telling me, the, when he sent the registration with the bank sent, the RMB people are refused. So fortunately, he has bought the vehicle from a car dealer, so he has immediately taken the vehicle, the registered vehicle, car dealer, and parked the car and told the car dealer, I want the money back. So they are taking the money. Supposing if you had bought the vehicle from a private individual, just imagine the flight, the risk you will be placed in. So remember, so vehicle also you have to be very careful when you are buying registered vehicle also. You have the option, even though the CR book is there, to be 100%, to ensure the accuracy 100%, you have to check with the RMB. Online, you can check it to see whether he is the owner of it, whether there are any charge registered with the RMB. Any questions? Now we are coming to the next one. Any other questions on this motor vehicle? These are easy security, but still for all, this is also part of our syllabus. Any questions on that? Right. Now I am coming to the next important security, life insurance policy. Now when I talk about this life insurance policy, before coming to the life insurance policy, now this article, what I wrote, which was published in the Daily Mirror, if it is not clear, you can even put the date and Google again, you can see that particular article, so that I think you will be able to read. I think you should be able to read. But here, this is covering SME facilities, that is microfinance facilities, small builders, small time people. But here I have given the details. At the same time, I have also explained the major risk. In this particular one, if you all read the article, I don't know how many of you all read it. What is a major risk apart from the follow-up? What is the major risk we have here? What is the major risk? Apart from the, you are granting a loan to a person who is involved in SME, small and medium entrepreneurs. So microfinance facilities you are granting to them, they are unable to provide any security assets. So we are giving a facility strictly on a supervisory basis. We are granting the loan because we are compelled to grant the loan because the central bank has put a condition that each bank should have part of their portfolio, 20% or something, or 10% or whatever it is, should be channeled to microfinance. Not only that, from last year, the central bank has gone one step further and said the bank's microfinance facilities outstanding should grow 20% every year. Every year, there should be a growth of 20%. So when you are granting the facilities to microfinance, you are going to grant them on a strictly monitoring and follow-up basis. But apart from that, what is the major risk for which you are exposed on microfinance? What is the major risk? Can you all tell me? What is the major risk?
Since it's given clean basis, if in case of a default, difficult to recover?
Yes, clean basis, difficult to recover. That's why we have told it's follow-up basis. You have to strict on microfinance facilities. We will be granting clean basis, but strictly on a follow-up basis, you have to. That means if you have to buy raw material, we give the money to buy the raw material. Then we have to carry out inspection to see whether he has bought the materials. Raw materials have been delivered. Then the work, all those things have to be taken into consideration. But apart from that, in this article I have explained, apart from that, even in my presentation also, when I explained to you all about the pledge loan, I told you all the bank is exposed to a major risk when we are granting loan to SME sector? What is the major risk?
Depth of the customer.
Right, very good. Depth of the customer. In this article also, if you read the article, I have stated very clearly, I have stated how you could mitigate the risk. Depth of the customer. So how do you mitigate that risk?
Life insurance again.
Right. You are taking a life insurance policy. You will mitigate that risk by taking a life insurance policy. Then when you say, now, under what circumstances we are taking life insurance policy? So when you are when you are giving loans to microfinance, the SME sector under microfinance, small time people, because they are these small time people. I think there is some disturbance. You may have to. Somebody's. Yeah, you have to. Yes. So whatever you all talk, whatever discussion you have among yourself with your friends or colleagues or whoever they are, everything is recorded. Be mindful. Everything what you talk is recorded. Not only recorded, the people who are talking, their name also will appear here. So that is there. That will remain there. So anyway, coming back to the microfinance loans, small time people, builders, caterers, like that, small people who are involved in small time business, they are unable to provide us with security. So when we grant facilities to them, strictly on a follow-up basis, which I have explained in that particular article, I have explained very clearly. I have explained. So read that very carefully. So the only risk we will be faced is the life of that particular borrower, in case something happens to him. How do you overcome that? By taking a life insurance policy. I am urging the people who have not read that article, please read it very carefully again, because everything is very clearly explained in that article. As when we are granting, because SME is the way forward, because government also wants the banks to help such people. So bankers have no problem in helping such people, because always bankers will prefer to give a loan to a doctor, engineer, lawyer, because 10 million loan you grant to a lawyer for him to buy a house, apartment or a vehicle. So the risk is minimal, but that is only for his benefit. So that doesn't give the country any economic benefits. But on the contrary, if you utilize a 10 million loan, 10 million facility and grant loans to about 10 or 15 people who are involved in SME sector, small time people, just imagine the benefits which the country could derive, employment and various other factors, benefits which we could derive. So when we help such customers, the only risk we are having is life of that particular business. If it is, take for instance a welder, for an example, we take a welder who is supplying grills or gates. So we are sure as long as that welder is there, there is no risk of our advance going bad. Why? You are going to carry out regular inspection. In microfinance, regular inspection is an absolute necessity. In microfinance, regular inspection is an absolute necessity. So there is no problem. But the only problem we have is the life of the welder, because we have no control over that. The welder could die, he could meet with accident. How do we overcome that risk? By taking a life insurance policy. Most of the people are not aware of this particular mitigating techniques in microfinance. I know I have lectured, some time back I conducted a lecture for people who are involved in microfinance. They are not bankers. I was invited by a reputed organization. They one day contacted me and wanted me to conduct a session for their people. And they said their people are, there are about 55 people we are invited to participate in this seminar. And he said, we want you to come and share your experience. And they told me very clearly, these are people involved in microfinance because they are granting loans to the microfinance. It's a UN organization. And they said, sir, remember, they are not bankers. They told me they are not bankers, so they don't have the experience bankers are having. Then it was held at SLFI, Sri Lanka Foundation Institute. I went and I conducted a session, similar session. I explained this, this one. So after the session, a lot of people came and spoke to me and they told me, sir, we are not aware. They were clueless. So they said, now hereafter when they are going to grant loan, they are going to tell their customers, they are the people who are taking microfinance facilities, to go for an insurance policy. So what happens? Let us assume that you are granting a loan to a welder, 5 lakhs loan you are granting to the welder to buy the raw materials. So read that article, everything is explained. So I am going to in this session, I am going to explain the risk which could arise in case the welder dies, meets with an accident due to an unforeseen circumstance situation, the welder dies. How do we recover? Because the welder's wife will not be able to, welder's wife or son or sister or whoever it is, they will not be able to continue with the business. Can they continue? No, they won't be able to continue. So what will happen? This will result in the closure of his workshop, and this will also result in you facing with the eventuality of writing off the exposure. So to avoid such an eventuality, we will tell the welder, can you get a life insurance policy for 500,000? Here you get a new life policy. So you may be wondering, sir, this life policy has no value. Yes, it has no value, but it has a value in case if he dies. That's what we are worried about. It will have a value only in case if he dies or at maturity. So we will tell the welder, you have to get a life policy for 500,000 rupees. So we'll tell the welder, please get a life insurance policy for 500,000 rupees. New life policy, spread it up to the maximum with the welder. Generally, most of the welders are young people who are involved in the service sector, they are young people. So we can tell you can take it up to the maximum, 30 years. So you have to pay only a small amount of premium. So he takes a life policy for 500,000, gives a life policy to you, you are taking the life policy, it is under your custody. Now certain life policies, there is an accidental benefit. What do you mean by accidental benefit? Some insurers give life policy with accidental benefit. They say this life policy is with accidental benefits. When you say accidental benefit, what happens is, if that particular life policy holder dies due to an accident, they will pay double the amount. That is what is called accidental benefits. That means some assured is 500,000 with accidental benefits means if the person dies of an accident, they will pay 1 million. So then you are taking that life policy to mitigate that risk which could arise due to the death of the life policy holder or due to a disability. The welder has, while he is involved in the doing the welding business, he has lost his vision. That's also high risk, this thing. So as a result, he is unable to perform his duties. So there are certain life policy which disability clauses. So in case if he gets into that situation, we don't have to worry. Insurer will pay the full amount. That is the reason why we are taking a life insured policy to mitigate that risk. Is it clear to you all? Is it clear? Is it clear? Any questions on that? Because there will be a question on this. Now let me ask you a question. Okay, now you are taking the life insurance policy. You have granted a loan of 5 lakhs to this particular welder. You are doing the follow-up strictly on a follow-up basis. You are taking the life policy also. Even if the welder dies, you don't have to worry. You can claim the money from the insurer. Supposing if this welder commits suicide, will the insurer pay? One morning when you're going to the bank, somebody is coming and telling you, sir, this welder has committed suicide. So if the welder commits suicide, will the insurer pay?
No, sir.
No, insurer won't pay. Then how are we mitigating that risk? So what's the point in taking a life policy if the life policy doesn't cover in case if he commits suicide?
It's not an accident, no, sir.
Yes, it's not accident, so therefore it's not accident, they won't pay. Then so the banks are taking a risk. But let me tell you,
Loan protection.
yeah, but let me tell you, even for suicide, insurer will pay. Now, most of us are under the impression that suicide, life policy does not cover suicide. It doesn't cover. But according to the insurer, life policy will cover even if the customer commits suicide. Even if the customer commits suicide, if the life policy holder commits suicide, also the insured will pay, because this we asked at a seminar many years ago, we asked at an insurance seminar. This was the answer given. Insurer will pay the claim due to the life assured committing suicide, provided if, can you continue the sentence? Can you complete the sentence? Provided if what? Provided if they say yes, we will pay, provided what?
If the insurance was, the premium was properly paid.
Paid. Premium was paid on the due date. Yeah.
Yes.
In any case, premium has to be paid on the due date. Apart from that, insurers, according to the insurer, they will pay life policy, even if it is suicide, they will pay, provided the life policy has been in force for a minimum period of at least 1 year. Is it clear? Suicide also they will pay, because provided if that policy has been in force for a minimum period of 1 year. Insurer will pay, even for suicide they will pay, provided the policy has been in force for a period of 1 year. Why do they say that? Why are they saying that 1 year they will pay, provided the policy has been forced for a period of 1 year? Because suicide, when you say suicide, when you're talking on the subject of suicide, I have gone for 3 suicide funerals. I have gone for 3 suicide funerals. So when I spoke to the family by the circumstance under which these people have committed suicide, very pathetic story. Very pathetic story, because these people, they never had an intention of committing suicide. Due to some reaction which has happened overnight, they have committed suicide. So in other words, what they say, according to the insurers, what they say is, a person who is committing suicide is not going to plan. Now today is what is the day today? Today is 27th of June 2021. I have a plan to commit suicide in 27th June 2022. Is there anyone who will plan like that? Is there anyone who will plan? No, nobody will plan like that. Nobody will plan. No, I want to commit suicide, but the only thing is I have postponed it. Because my life policy is maturing only next year. So because that, I have postponed. No, that will never happen. Because suicide is at the spur of the moment, something has gone wrong, you commit suicide. I have come across, there was another case, a lady who committed suicide when I was working at one of the banks. One evening when we were coming out at Kolpiti, I think it was at Pan-Asia Bank. When we came out, I saw there was somewhere closer to that bank, there was a big pandemonium. Then we heard a lady has committed suicide. Moneyed people, 2 Benz vehicles are parked in that house at all times we have seen. And this lady has, she has put a rope or something on the ceiling fan with 3 children. She has committed suicide. So I don't think he would have ever even dreamt of committing suicide. So suicide, at the spur of the moment, if something goes wrong, when you feel that you want to teach a lesson to somebody and you commit suicide, then it's too late. So that's what, I know another case where a girl committed suicide. She had a problem, fought with the mother. She had argued with the mother, a very talented girl, and something has gone wrong. She has gone and locked herself into the storeroom, and inside the storeroom there was run bug. He drank run bug, and they have rushed her to the hospital. On the way to the hospital, this girl died. So there are many cases like that. All these cases, as I told you, the 3 suicide funerals which I have attended, very pathetic stories. These 3 people, I don't think they would have ever even thought of committing suicide. At the spur of the moment, something has gone wrong, and for their bad luck, these poisonous items were also within their easy reach. Therefore, they are taken. So remember, if you have any poisonous item there, don't keep it closer to you. Put it away, because otherwise you will be tempted to take that. So it's too late. It's too late. So insurers also have assessed this risk in that way, and that's the reason why they say a person who commits suicide also, they will pay, provided the policy has been there for a period of at least a minimum period of 1 year. Supposing if a person wants to commit suicide, I want to commit suicide, so therefore, but before I commit suicide, I want to ensure my family is looked after well, so I want to get a life insurance policy of 5 years. Nobody will do that. Do you agree? Do you all agree? Is it clear? Is it clear?
Yes, sir.
Yes. So remember, I think sometime back we posed a question, life policy, when we obtain a life policy, whether the insurer will pay if the life policy holder commits suicide. The answer is insurer will pay provided the life policy has been in existence for a minimum period of 1 year. If the policy has been in existence for a minimum period of 1 year, the insurer will pay, even for life policy. So how do we secure the life policy? When we are taking the life policy as security, number 1 is the customer. When the welder, we are told the welder to take a life policy. When he takes a life policy, he'll have to give us the original life policy document. He'll have to give it to us. The bank should have the original life policy document. Then, in addition to the life policy document, we execute another document called deed of assignment. That is a document, your bank or your financial institution, they will have a document where that document is called deed of assignment, should be executed by the life policy holder, assigning their rights to the bank and revoking any existing assignment executed in favor of the independent. So in other words, he will execute a document called deed of assignment. By that document, he is assigning his rights in favor of the bank. He is assigning his rights in our favor. He is assigning. So once these documents, you receive this document, you have to send this document to the insurer, that particular insurance company, and say that you have granted a loan to this particular customer. As security, you have taken his life policy. You want the insurer to register your charge. That's why you are sending the deed of assignment. Some insurer may request you to send the original policy document, which will return to you. Some may not require. Then the deed of assignment is the most important document which should come back to you, where the insurer has registered your charge in their records. They will put their rubber stamp and say, this has been registered. Once that is registered, they will return the document to you, confirming that is registered in your favor. What else do you require when you are taking life policy as security? These are the only 2 stipulations, or what else you have to do? Can you all tell me what else you have to do? When you take life policy as security, what else you have to do? What else you have to do? Are these documents enough, or do you have any other thing to do?
So age admitted.
Yes, very good, very good. I have very good. I have forgotten about that. Age admitted. What is this thing? What do we call age admitted? Now, see, when you say age admitted, now see, today if I want to get a life policy from an insurer, I go to an insurer and ask for a life policy. Then the insurer will give me a application form. That application form is defined, known as proposal form. That application form is known as proposal form. So I have to give my full detail. Let us assume this welder. The welder has gone to the insurer, agent, insurance agent. The insurance agent has filled the documents, told the welder to complete the document. So he is completing the document. The welder is completing the document one by one. The agent told he is filling the form for this welder one by one. The agent is filling the document. So when the agent filled the form one by one, when the agent filled the form, the insurer he says, he gives a name, he gives a date of birth, all the vital information the welder is giving. So after it is giving one particular column, that is the column where they are asking the date of birth of the welder. So the welder is giving the date of birth. The insurance agency is filling one by one, the agent is filling. So the date of birth, there's a column in the proposal application form, but it's a date of birth. So he is giving his date of birth. He's giving his date of birth as, say, 25th of June, 1995 or something is given. So the insurer, yes, he's accepting. Application form is accepted. Policy document is given. They are telling you have to pay the premium, initial premium, 100 rupees you have to pay or 1000 rupees you have to pay every month you have to pay. And they are giving the policy document. So when they give the policy document is a confirmation, it's a title deed which confirms that the insurer has entered into a contract with this welder. That is, in case if he dies, they will pay this amount. In case of accident, they will pay this amount. In case the policy mature, they will pay. Policy document gives all the details. But there is a column in the policy document which asks whether the age is admitted. In the policy document, there is a column which asks whether the age is admitted. So the insurer would have told, what do you think insurer would have told? In the policy document, there's a column which asks whether the age is admitted. According to your opinion, what do you think the insurer would have told? Now the welder, when he wants to get the life policy, he has gone to an agent. The agent has filled everything and taken to the initial premium he has taken, submitted to the insurer. Insurer has issued the policy document. So when the policy document came, there's a column which says whether the age admitted. What do you think the insurer would have told? Whether the policy document, when they see the policy document, there's a column. The amount of policy 1 million or 500,000, name of one by one, premium, monthly premium amount. Then there's another column. Whether the age is admitted?
Yes.
Yes. So where there is a column which asks whether the age is admitted. So in this instance, according to you, what's the answer you gave? Yes. What's the answer? Yes.
Yes.
No, but the answer will be no. The answer will be no. Why the insurer will give the answer, not yes, he will say no. Why? Because this welder has not submitted documentary evidence to prove his age. That's why they say no. Am I correct? If he has given a copy of his birth certificate, if he has shown his original identity card, then they would have said yes. Am I correct?
Yes.
But here, in this instance, the welder has gone to the agent has filled everything, and he has not taken his identity card. He didn't have the birth certificate. So welder, the insurer is also very interested in getting the business. So they are taking the business and they are taking the first premium, and they are not bothered. They are not going to ask him to submit the death certificate, original birth certificate and all. What they want is you to get the insurance policy. So then when you got the policy document, when you as a banker, when you have got the policy document, the age admitted is one of the vital element which you have to check. So we are checking and seeing age admitted, no. When you ask the insurer why you have said age admitted no, then insurer will say, no, he has not proved his age. He has not submitted documentary evidence to confirm his age. Therefore, we have said no. Then when you get the policy document with the age admitted no, then what happens? You can accept it. Then it is your responsibility. Insurer is not bothered. Insurer is not bothered. For them, if the age admitted yes or no, they are not bothered, but they want the premium. So it is your responsibility. Then you will ask the insurer, life policy holder, the welder, you have got the life policy holder, you are not giving the birth certificate to them. He said, no. Do you have the original identity card? You are not shown the original identity card. He said, no. Do you have the original identity card? He said, yes. Do you have the birth certificate? Then you will ask the welder to bring everything to you. Then you will take the original birth certificate. If he doesn't have the original birth certificate, you will ask the welder to get the original identity card. Then you will take a photocopy. You will confirm. And then you will write to the insurer and say, now we have spoken to the welder and now he doesn't have the birth certificate, but he brought us the original identity card, which we have perused, and we confirm this, and you send it to the insurer. Then the insurer will write back and confirm the age is now admitted, and the document, you will get a document which will be attached to the policy document. Sometime when you get a policy document, if the age is not admitted, you can go through the policy document and see whether there are any attachments. Sometimes the policy document, there will be attachment. If there are no attachment, then you will write to the insurer. Then the insurer will confirm to you the age is now admitted. Why are we so worried about this? Why are we so concerned about this age admitted? The reason is insurance is a business. When you are entering into a business contract with the insurer, you are liable, you are obliged to speak the truth, nothing but the truth. That is one of the concepts in insurance. The moment any information given by you has been proved incorrect, the contract becomes invalid. The contract becomes invalid. So let us assume here this welder, welder is not a qualified person, they are not educated. When the insurer asked him, what is your date of birth? When the insurer asked him, what is your date of birth? The welder, sometimes these people may not be able to remember their date of birth. I know they won't be able to remember their date of birth. They don't celebrate the birthdays. And even now, today's context, nobody celebrates the birthdays. So the welder, sometimes even they may not remember the exact date of birth. Then they will say, if you ask the welder, what is your date of birth? Welder would have told, Mata Mathakam Theatre, I think I was born in January. January when? January 1995. What's the date? He said date, no matter, I can't remember. 5th of January. He gives 5th of January. And insurer, that's the reason. Insurer said not age is not admitted. Then in case if the welder dies and you lodge a claim with the insurer, when you want to lodge a claim with the insurer, insurer says his age is not admitted at the time of issuing the policy. He has not provided documentary evidence to prove his date. Can you please submit document? Then at that time, you go to the welder's house, speak to the wife. Then the wife is in a possession of the birth certificate. Then at that time, you find This man was not born in 1995 January. He was born somewhere in 1990 January. But he has given a wrong disclosure because due to ignorance. Then you submit the document to the insurer, the original birth certificate. The insurer will say he has given the wrong date of birth. So therefore, this contract becomes null and void. They will not honor the claim. Is it understood? Is it clear to you all? Any questions? Is it clear to you all on the concept of life insurance, age admitted? Is it clear? Why we ask for the age admitted? Any questions on that?
Yes, sir.
Yes. Thanks for asking that question, very valuable question. Yeah.
Sir,
Yes.
let's say if we have not obtained the insurance as a security,
Yes.
then this insurance holder goes for a claim. So will the insurance company will honor the claim if this age difference is there?
So sorry, can you come again?
Now, if we have not obtained the life insurance policy as a security,
Yeah, yes.
and the customer goes, this insurance holder goes to lodge a claim.
Yes.
And if then will this insurance company honor the payment if this insurance if this age admission problem is there?
Yes, they will not honor the call. They will not honor the claim. That's why we say because the insurance you have to give, you have to give the full disclosure. You have to give the factual situation. You have to give the insurance under insurance. Insurer is not coming and checking everything. No, he is solely going by the declaration given by you. And one of the condition is that if any of the information provided by you becomes false or not the truth, then the contract becomes cancelled, null and void. Is it clear? So, even if he has not taken a loan and if he has gone to the insurer, then insurer will say, no, you have given the wrong date of birth. And now the document says, then he had to prove to the insurer, no, I didn't know, at the discretion of the insurer. But the concept is, if any information given by the insurer is found null and found incorrect, the contract becomes null and void. Contract becomes null and void. Is it clear to you all?
Yes.
Okay. Take for instance, if you are insuring your vehicle, when you are insuring your vehicle, sometimes some insurers want to do an inspection. It's a registered vehicle. Some insurers want to do a inspection. Some may not. But then you give a declaration to say the vehicle is in very good condition. Then after giving the insurance cover, after 1 week you go and lodge a claim saying that there was an accident or something. But if then it was revealed, insurance assessor comes and inspects and he comes to the conclusion, no, this particular damage would have occurred 1 month back or 2 months back. So you are taking the policy only last week. At that time, you have confirmed that the vehicle is in good condition. After getting the insurance, you lodge a claim saying there was an accident or something has happened while reversing the car, this has happened. Then the assessor comes and the assessors are experienced people. They come and inspect and they come to the conclusion, no, this particular accident must have, while reversing the car, no, this has happened. When did this happen? You say, no, this last week only, this happened yesterday. Then the assessor says, no, according to my assessment, this must have happened about 3 months back. Then they will not pay. Why? Because you have not given the factual situation. So, in case if there is any, when you are disclosing the information, you are obliged to give the correct information. Anything clear? Any questions on this? Is it clear to you all? Any other question?
Yes.
Yeah. Now, apart from this, now when you are taking life insurance policy, I told you have to get the original life policy document, you have to get the deed of assignment. Then somebody said, the person who said about the age admitted, I am very thankful because that's all very important. I explained to you all. Apart from this, There is another important stipulation which you have to follow. What is that? Can you all tell me? I know you all are hungry. I will be finishing it in 5 minutes time. With this, insurance, I'll explain the insurance, and with that I will conclude. So apart from these three stipulations, is it enough for you to ensure that the life policy is enforced? What is the other important criteria which you have to follow?
Insurance should be mature.
Yeah, mature. It will mature only after 25, 30 years of.
No, it's like whatever his premium should be paid fully.
That's the thing. You have to ensure the payment of premium. Apart from these three stipulations, the additional stipulation is you have to ensure that the premium on this life policy is paid. Now, the welder, he has taken a life policy for 500,000. He has paid taken a life policy, which he has given to you as security. Initial premium 1,000 rupees. Let us assume initial premium 500 rupees he has paid. But it's one of the condition. Every month or every quarter, whatever the stipulation given by the insurer, he'll have to pay this premium every month. He'll have to pay. Otherwise, the policy has no value. You will be only having a piece of paper. So the welder, the insurer, the borrower has to pay the premium every month to the insurance company. So how do you comply with that? Welder will say, no, sir, I will pay. Welder will say, no, we don't take the welder's word. We will tell the welder, this 500 rupees will be paid. Bank will remit the premium. So the bank will take the responsibility. So the welder has to fund the account every month. He has to fund the account with 500 rupees. He must ensure that 500 rupees is there in his account every month. So the bank will monitor. How do we monitor? We take standing orders from the welder to remit the premium through the bank. So we will be remitting the premium through the bank. We will debit the account and send the premium to the insurer. Whether there is money or not, we will debit. Even if there is no money, we are not going to wait till the welder deposit the money. We will remit the premium. Supposing if it is a savings account, if the welder's account is a savings account, we can't debit savings account. Then you have to debit suspense account debtors and remit the money. So you give a call to the welder and say, today your premium is due, there's no money in your account. So welder says, I will deposit next Monday. So are you going to wait till he deposits? If you wait till he deposits, and in case if he, during the intervening period, if something happens and if he dies, insurer is not liable to honor the claim. By insurer will say premium has not been paid. So you have to be very careful. Premium, this is the most important, crucial follow-up we have to take it when we are granting life insurance policy. There was a question some time back. When we take life insurance policy, what is the most important follow-up stipulation which we have to adhere? We have to ensure standing order is maintained, recorded to ensure the payment of premium, because insurer will not honor the claim if the premium is not paid on the due date, if the premium is in arrears. Is it clear to you all? Is it clear?
Excuse me, sir.
Right.
Sir, we are granting the facility against the surrender value of the policy, no?
Yes, yes.
Surrender value, if the policy is in force or not, the insurance company should be pay the surrender value, no?
Yes, surrender, that's right.
Yeah.
So now I come to the surrender value. Next slide is that surrender value. Now see, now this is a question, no? Surrender value. Now, your question is for surrender value, neither.
No, my question is the surrender value is that now we are guarding against the surrender value, then the policy is in force or not, the insurance company should be
pay.
On the pay the
pay, that's right, yes, pay. But in this case, in this welder's case, there is no surrender value. Why? Because it's a new policy. Am I correct?
Okay.
Now, in this welder's case, now your question is a very good question. Surrender value, what is surrender? Before that, I'll explain to you what is surrender value. What is sum assured and what is surrender value? Now see, this welder has taken for this welder, you have approved a loan of 500,000 rupees. Right? For this welder, you have approved a loan of 500. I want to explain this surrender value and sum assured. For this welder, you have granted him a loan of 500,000 rupees, for which you have asked the welder to obtain a life policy for 500,000, which he has obtained. So take this welder's life policy. What is the sum assured? Can you tell me, for this welder's life policy, what is the sum assured? What is the sum assured?
The total amount to be paid at the maturity of the policy.
Right. Yes, the total amount of the policy, life policy, is 500,000. That is what is known as sum assured. That means that is the amount the insurer will pay in case of death or in case when the policy matures, whichever occurs first. Then what is surrender value? In this welder's policy, sum assured is 500. Now I am asking you a question. In this welder's policy, what is the surrender value? In this welder's policy, what is the surrender value? Can you tell me, what is the surrender value? Will this policy have any surrender value? Will this policy have any surrender value? Will this policy have any surrender? Don't worry, you can give whatever you are. You can just
yes, sir. After servicing the certain period of the policy, then maybe 3 years. So
that's right. Yes. So in this welder's policy, surrender value does not arise. Why? If you ask for the surrender value, insurer will say surrender value is 0, nil. There is no surrender value. There is no surrender value. There is no surrender value for this policy. Why? Because this policy is a brand new policy, not even in force for 1 week. So there is no surrender value. So what is surrender value? When you say surrender value, sum assured and surrender value. Now, sum assured is the amount of the policy, that is the sum assured, will become payable by the insurer only on the death of the policyholder or the maturity of the policy, whichever occurs earlier. Surrender value, look at this slide carefully. Surrender value is the entire amount stipulated as a surrender value by the insurer will be paid by the insurer if a claim is made by the bank. Surrender value becomes payable anytime, even before the maturity or the demise of the life policy holder. So for a surrender value, if there is a surrender value, the insurer need not die. You surrender the life policy, you can get the money. So how do they work out the surrender value? Now, steps toward assessing the surrender value. Now see, when you say surrender value, before that one, if the policy has been in force for a minimum period of 3 years, that may vary from insurer to insurer. This particular welder's policy has been in force for a minimum period of 3 years. And if he has paid, let us assume he has paid 100 rupees monthly. For 3 years, if he has paid 3,600 rupees, there is a surrender value. Why? The policy has been in force for a period of 3 years. He has paid 3,600 rupees. So if you ask the insurance company whether there is any surrender value, they say yes, there is a surrender value. What is the surrender value? They may say 1/3 of the premium what he has paid. So if he has paid 3,600 rupees for 3 years, insurer will say, as an example I am giving, it may vary, 1,200 rupees is surrender value is 1,200 rupees. So they give a certificate saying surrender value is 1,200 rupees. So to get that money, insurer need not die, policy need not mature. Even if he has not paid the premium, policy may lapse. Then you can surrender the life policy and get the premium, get the amount which has been stipulated as a surrender value. You can get from the insurer. But will it serve our purpose in this instance? Will it serve our purpose? Yes or no? Will it serve our purpose?
Yes.
No, will it serve our purpose? Surrender value? We are worried about this one. We are worried about in this welder's case, we are worried about the sum assured, not the surrender value. We are not, because surrender value, you will, you may get 1,200 rupees, whereas you have lent the welder 500 rupees. So, sorry, 5 lakhs. So surrender value will not serve the purpose. We are worried, we are concerned about sum assured. Is it clear? Please let me know if you have not understood the concept of sum assured and surrender value. 500,000 life policy, you go and get an insurance cover for 500,000 rupees. The sum assured is the amount which the insurer has contracted with you. Sum assured is a portion of the premium what you have paid for a minimum period of 3 years. Even though your policy is 5 lakhs, surrender value is a small amount. That will not be enough. That will not be adequate to serve our purpose. We are only worried in case something happens to the welder, what is going to happen, whether we can recover our liability for which we want the life insurance cover. So even though there is after 3 years, it will have a surrender value, we will not surrender the life policy as long as our life policy, our liability is outstanding. Is it clear to you all? Is it clear?
Clear, sir.
Yes. So now, when you are granting a loan to the welder, let me ask you, you are interested in, out of these two, which one will give you comfort?
Sum assured.
Sum assured. Remember, sum assured. So surrender value. So let us assume that if you are granting a loan to a particular customer who comes to the bank, a walk-in customer who comes to the bank and says, I want to get a small loan of 5,000 rupees. Then you may ask the customer, do you have any security? He said, I have a life policy which I took 15 years back. I took a life policy. Let us assume a small-time customer, a walk-in customer, comes to your bank and says, say, I want to take a loan of 5,000 rupees. So you speak to the customer and ask the customer, so, do you have any security? I don't have any security. I have a life policy which I took about 15 years back. So do you pay the premium annually, monthly? Yes, I am paying the premium monthly. Then you are convinced that policy will have some surrender value because this man has been paying the premium for the last 15 years. So what you will do is, you will just roughly work out. You will ask the customer, what is the amount you are paying monthly? He may say, I am paying 200 rupees. So you work out 200 rupees for 15 years. Then you know that has a surrender value. Then you may agree to grant a loan of 5,000 rupees. And for that 5,000 rupees, you are taking an insurance policy which has a surrender value. So for that surrender value, for that policy, the the holder of the policy need not die. If he defaults, you surrender the life policy. That's why it is called surrender value. That's why it has been labeled, has been termed as surrender value. You surrender the life policy, insurer will pay that value stipulated, not the sum assured. So when you say surrender value, steps towards assessing the validity of the surrender value certificate should be called for. You can ask from the insurer for the surrender value. The certificate will indicate the validity of the policy in addition to all of the details. The policy holder should authorize the insurer to call for such information prior to the assignment, since the insurer is not liable to disclose such information. So when you want to get a surrender value, you can ask the insurer, then for which you need a letter of authority from the customer. But now here, we are now see how do we assess the surrender value on a life policy? Request for a surrender value certificate from the insurer. We ourselves could for the interim, until the certificate is obtained, could work out the tentative value based on the policy holder submitted by the prospective buyer. I am talking about the small-time customer, not the welder. A small-time customer who has walk-in customer come to the bank for a loan of 5,000. You are having a discussion with him, and you say, I want for urgent purpose, I want 5,000 rupees loan. Do you have any security to offer? I don't have any security. I have a life policy. When did you take the life policy? 15 years back. Are you paying the premium on the due date? Yes. Then you can just slowly work out. We ourselves could work out for the interim until the certificate is obtained, work out the tentative value based on the policy document submitted by the borrower. So now we are on the subject of life policy. Remember, life policy, this is the, if there's a question, how do we secure life policy? What is the most important follow-up on a life policy? The age has to be admitted. I explained to you all. Most important criteria is, follow-up criteria is payment of premium. It should be paid through the bank. If the welder says, I will pay the premium because the agent will come and collect it, we don't allow. All life policies which are assigned in our favor, the bank, the premium should be paid through the bank. Whether there is money or not, we are debit account and pay. But savings account, you can't debit. You can debit suspense account details and remit the premium. So as far as the welder is concerned, we are interested about the sum assured, not the surrender value. Is it clear to you all? Is it clear? Is it clear?
Yes, sir.
Okay, sir.
Yeah. So right, anyway, I have come to the conclusion today. Now I think I have told Menaka to put that e-flyer of my book also in that system that is available. They have put that cover. So the contact details are also there. If you are interested, you can speak to them. They will mail it to you. Apart from that, please go through all the recordings very carefully. And if you have any questions, you can ask us. We have, hopefully, we have 2 more sessions to conclude this session. So how was today's session? Was it clear to you all? Was it clear to you all?
Yes, sir.
Yes, sir. Yeah.
Anyway, thank you very much. Hope to see you all next week, sharp at 8:30. And go through the recordings very carefully. And you don't have to worry because it will be a very easy paper, provided you go through all our recordings very carefully and answer the questions. So you don't have to worry. I think I have... how many today? This is the third session, no? Today is the third session. Yes, I think today is yes, third session. I think we have, hopefully we have 1 or 2 more sessions. So thank you very much.